What is up, everybody? Welcome back to another episode of Benzinga Live. Happy Wednesday, hump day, and it is Fed Day, the day we've all been waiting for. We will get this press conference at 2 p.m. Eastern. Get that. What? 2:30 Eastern, Spencer says. I thought it was 2 p.m. Eastern, but I guess it's 2:30 that we'll get the announcement at. Real quick, checking in on crypto, how crypto's trading ahead of the announcement. Bitcoin slightly in the green. We can see up 0.07%, while Ethereum is down 2.5%. Cardano down about 1.5%. Avalanche up more than 10%. So your big winner there, Avalanche. Dogecoin down more than 8% after its strong day yesterday. So pretty mixed bag for crypto there, but of course we'll see how Bitcoin and Ethereum react after we get this announcement this afternoon. All right, y'all, we've got a packed show today. So coming on with me in a few minutes will be David Green. We'll be doing some live trading with David Green. Then we've got Triangle Health CEO coming on at 12:30. Gene Munster, Joel, and Todd will be joining us at 1 p.m. Then Gareth Soloway from InTheMoneyStocks at 1:30. So again, packed show. Let's go ahead and get started.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Meta Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news.
Hey, we be patient here, guys and girls.
Mr. David.
Yo, what's up, ladies and gentlemen? Happy Fed Day. What's going on, everybody? Pleasure to be here, as always.
Pleasure to have you, David. So what have you been trading this morning?
All right, David Green, Mr. Jimmy Hoffa. Let's see. We have been trading a lot of stuff this morning. I think we had 7 trades this morning. We are kind of on hold now until the Fed comes in. We're watching the video right now. We had a trade earlier this morning in the video on the short side. If you guys remember the technical analysis that we're using here, right? We use all our moving averages and pivot points. And the video gave us a nice short trade when it spiked up to our pivot point up here at right around 290. We entered that trade short, and we were able to take like 50 cents and $1 out of it. So that was one of the trades that we did. Yeah, we canceled Microsoft, guys. Microsoft's getting the smack a dacket. So we're looking at the video right now, and we're in the take it easy mode for the rest of the day. So we're looking for things that are going to real extreme. So the video we were looking at our 65 EMA. You can see how it's coming in pretty nicely here, but we're going to be a little more patient. We're going to wait for our 200, which is down around 283.35. So we're going to put an order in the video to buy a little at 283.35.
So David, I want to talk about what stocks will get hit hard if the Fed announces a raise of rates, and which stocks will do well on a raise of rates, and vice versa. If they announce, okay, we're going to push back the date we're going to raise rates, then what stocks will do well and what stocks will get hit?
You would think. I mean, one of the things that we're going to be concentrating on are the financials, right? So the way we'll follow the financials is with FAS and FAS. Those are the ETFs for the financials. And FAS is the bull. So if they're going to hint at raising rates, that should be better for the financials. We'll look for some technical analysis to trade the FAS. So that's one thing. We're going to be keeping our eyes on the financials. We will also be watching gold, right? Gold will be affected by whatever decision rate they make. And of course, you guys were talking about Bitcoin, right? So
Yes, sir.
We'll absolutely be keeping a close eye on Bitcoin too. It's interesting in Bitcoin, we tested a level and we're actually on it again right now for like the 3rd or 4th time. I'll show you guys what I'm looking at on a daily chart, right? So we all know we're down severely from the highs, but we have tested, I'm going to call it, 47,000 just for an even number. Once, twice, 3 times now. Usually when something tests a level 3 times and we break through that, we're heading for lower levels. So be very interesting. We'll keep our eyes on Bitcoin. And the way we will trade Bitcoin is with Mara. We'll just stick to Mara because Mara is very tightly correlated to the price of Bitcoin and actually trades exactly with it. You see Mara made a high of $83 when Bitcoin was flying all the way up there. Now it looks, it looks the same as the Bitcoin chart. So I'm going to go to a weekly level, and here we go in Mara, right?
Yeah, you can see it at.
Go ahead.
I was just gonna say, it looks like Mount Mara's at that previous support too.
Almost, it's getting there, right? So down from 83, if we get a big smack attack in Bitcoin, $31, guys and girls, will be a level that I'm very interested in buying a little Mara. That is our 65 EMA on a weekly chart. So that should provide some pretty stern support if we would get a smack down to that level. And below that, we got 20. So, you know, my first inclination, I'm even going to put some orders out just in case something crazy happens in Mara around $31. That is a weekly level. And we never know what's going to happen with these announcements. You know, everybody's asking me, what do you think? What do you think? What do you think? You know, I'll give you two schools of thought, guys. Let me just go through a couple of trades my guys are posting here. Myrna, yes, 275.40 is good. Roblox has been a good trader for us today. It's been in a nice downtrend all day. You know, when stocks are in downtrends, they tend to stay in that direction. We could try a quick double bottom in Roblox. Yes. Let's look at Tesla. Tesla's been getting smacked, right? Elon Musk keeps selling stock. Let's look at Tesla on a little. I want to show you this from this morning, Aaron. This was another spectacular.
You traded on the short side?
Yeah. I mean, look, we spiked up right to our pivot point, which is another one of our technical analysis levels to show us where to buy and sell stocks. Look how it exactly hit that pivot point in a $970 stock. Hit that pivot point. I don't think it went above it by 50 cents, right? And
you got to have some serious cojones to short Tesla.
Well, here's the gig, okay? You really don't, because what we'll do in a stock like Tesla is we'll just cut our size. You know, if I'm in a stock where I'm normally trading 500 or 1,000 shares, right? And I'm in Tesla, I'm probably going to risk $2 or $3. So instead of doing 500 or 1,000 shares, I'll do 50 shares. And if it goes $2 against me or $3 against me, I'm losing $150. But the risk reward is that I'm not going to look to cover it until it goes down at least $5. And here's where we would cover the stock when it came down to a support level early, about $9.56. So that's $16 in Tesla that you didn't really have to think about covering it until it got to that level.
Yeah,
so
I mean,
go ahead.
Go ahead.
No, you go ahead.
I was just gonna say it's the chart. I mean, if you go out on a daily or weekly, it's just in an ugly trend right now. And I mean, I don't know. This seems like one of those stocks that if Powell comes out and they do announce a raise of rates, this seems like one that could get hit pretty hard.
Yeah, and so what are we going to do? This is the times, especially in stocks like this, that I start to get a little watch list ready of stocks that I would like to pick at if something really crazy happens, right? So Tesla, look, let's go to the weekly. We probably have something sooner. Look, we just broke a big weekly level in Tesla, right? Right around $954. So we just broke that weekly level. The next real spot for me is our daily level down around $800. That is the next real spot that I would seriously consider getting into Tesla again. And then our weekly, something really wackadoodle happens, we have 705. So everything that we do and that we're going to be doing is just based on our technical levels. People are asking me, what do you think the Fed is going to do today? Okay. From a trader's perspective, I could care less. I don't care what they're going to do. We are just going to react to what it is that they do and what they say that they do. We have done a couple of little what I call lottery tickets in the VXX in case we get a big move in the SPY or the markets one way or the other. Before we get out of here, I'll tell you what we did in that. Tesla for a trade, look at it, guys. It's just hitting our pivot point right around $932. Wouldn't be surprised if we get a little bounce from here. Again, we are in just total watch mode, and we're not putting any money at risk until after this stuff happens, after the Fed comes out. Unless something wackadoodle happens, right? What are you guys looking at? All right, let's look at the video here, guys. Yeah. Let's get out 283.40 small in the video. I like that. That's our 200 EMA. We want it to be on this pop down. So a lot of things are starting to take profits in right now, right? We can see a lot of the stocks that were up much higher this morning starting to come in a little bit. So a little profit taking going on. So if we're looking at the video to get to our 200 EMA, we want it to go fast, as we do in every single trade that we do. If it doesn't go fast down there, we'll cancel. We'll go down to the double bottom. This was a trade that was done very early in the video, right when the market opened. Spiked down, hit our support level at 281. 5 minutes later, the stock went up $9. and then hit a little short lever over there. So again, you can see we're getting a little bounce now. So we'll probably cancel that order. So as far as the Fed is concerned, right? We're going to wait. We're going to react rather than act before it. If anybody out there can tell me what you think is going to happen to this market before the Fed announcement, please let me know.
I think it's going to go up or down.
Yeah, I do too. All right, so we just got a little NVIDIA 283.40. We will have a 50-cent stop on it. We'll try to sell some around 283.70 to get started. Try to take a little profits. And
do you still have your long-term long position in NVIDIA, or did you trim some of that when it?
No, we trimmed some of that. What I do have is we started to buy a little SoFi again. Let me show you. Started to buy a little SoFi again. And again, this is a long-term trade. The stock just went. Oh, we just got stopped out in the video, guys. So let me show you a trade that just didn't work, guys. Okay, look at the video. It hit our 200 EMA. We got stopped out for a 50-cent loss. Now the stock just spiked down to 280.66. We're going to buy a little down here, guys. Let's try grabbing a little NVIDIA down here. Ah, look at that, guys. So you see we lost 50 cents. We just missed getting in at 285 for a dollar trade on the upside. Wow. Did anyone get the pivot point down there, guys? That would have got you right back. The 50 cents that we just lost just went up $1.50. $1.50 from the pivot point. So that was a little bit of an overreaction, guys. You see how fast that went down there and hit a support level and then ripped all the way back up. And it missed the double bottom by 6 cents. That is sick. That is absolutely sick. So you guys just saw a quick, hold on one sec. A quick trade that failed and a quick trade that worked for a lot more than we failed, right? So we lost 50 cents on that trade. That just yielded $2, guys. A $2 trade off the pivot point. Yeah, that's all right, Adam. It happens. All right. So talking about the Fed, if anyone out there can tell me what they think is going to happen after this announcement, then they're a much better trader than I am. I can tell you that right now. So again, guys, we weren't quick enough to get in down there, but that was a spectacular $2 trade. Kurt, you added to your trade down there? Well, then you're well in the money. I would take my profits now. So again, everything we do is technical analysis. And I think the most important thing, here's the gig, guys, right? If we didn't take our little 50-cent loss in the video, it turns into a $3 loss. So we take our loss, and then we get back in on the next technical level, which gave us $2. Chris, you got $1.50 on that. Very good. Excellent. Very nice, guys and girls. So these are the opportunities that we look for every single day. I got a fill on the video for a spread. Corporate water whipsawed. We're both wrong. It's going to be sideways forever. I actually believe a lot of Fed announcement is priced in. Sometimes it is, guys. Sometimes it is. You know, look, we'll see. We'll see. We just want volatility, Aaron. That's all we want. I want volatility. I want the market to move up or down a lot, okay?
That's the best for traders.
Exactly right. And you can see what just happened in the video, right? How cool is that? I mean, look, spiked down and then spiked all the way down to our pivot point for a beautiful trade. So that was very nice. SoFi, yeah, guys, I'll talk about SoFi for a couple of minutes, okay? So we started a tiny little SoFi. Guys, if you remember the last time I was on a few months ago, right? Thank you, Freddie. We had SoFi as a long-term swing trade at $14. And if you remember, we sold that stock between 21 and 23. You know, I'll show you the daily chart in SoFi. Okay, so here's the last time we were in. When we were down here again around 14 bucks, right here. We sold the stock between $21 and $23, and now we started buying the stock back again right around 14. So we start with a tiny, tiny amount. I will add to it down $1 from here at 13. And then below 13, I'll probably start getting aggressive at 12 and 11. And again, this is a long-term hold now. Unless, you know, we get a big bounce and we make 6, 7, 8 points, which we did last time in. So when you're getting into a swing trade and it's a company that you believe in and you want to stay with it for a while, start with your absolute smallest amount. Look, if we get the bottom when we buy our smallest amount, fine. And you average into it until you get your full trade on and then you're comfortable with the position and the amount of shares that you have, and then you hang out and let it play out. That's the way we enter into a swing trade. Now, look, guys and girls, I never trade anything big, all right? I am a guide for all of my traders, okay? I spend 99% of my day teaching people how to do this. So, it depends on what your size is. If you're willing to get into 1,000 share position in SoFi, you start with 100 shares here. If it goes down $1, you add 200 shares. If it goes down $2, you add 700 shares. You have your full position in a stock that you're comfortable with, and you're ready to go. Right? You guys know that I have, I've had Apple in my portfolio for many, many years. I sold stock last week. So it's prudent even at times when you're in a long-term position, when stocks get a little overvalued or overdone, in my opinion, you take some profits. So, I sold the – go ahead, Al.
Going back to SoFi for a second. So I know you like it long-term, but I'm curious kind of what can we expect out of SoFi with the announcement today? I know you're not going to be able to know if it's going to go up or down, but we talked about how financials could benefit. Of course, when we're talking about the financial stocks, we're talking about the big banks, JP Morgan, Goldman Sachs, Bank of America. But SoFi is kind of in that industry. I mean, it's seen more as definitely a growth stock, a tech stock compared to the big financials. But is there any argument that, hey, if the other financials are going up because SoFi's in lending and in all these other things, that it could go up too?
That's a great question, Aaron. It should, right? You would think that it would if all the other stocks in the same group are going up. I think at some point too, and guys, look, this is just my opinion, okay? I think SoFi could be a takeover candidate at some point. If we look at, and guys, please don't trade based on this. I think Robinhood has to do something at some point, right? This is a stock that has just gotten absolutely decimated. Please, I still have people that come into my room that are stuck in this stock from much, much higher prices, right? We're down from $85. The stock's trading at $17. I think I think SoFi is the future. They have a lot of different things that they're doing. It's not just a regular bank. It's not just a regular investment firm. And again, this is just my opinion. Is Robinhood going to do something at some point to shore up or to get things moving in the right direction? I don't know. I think it would be a good strategic partner with SoFi if they wanted to do something. And I'll tell you, you can wait to buy in at 10, Sam. I can tell you what we're doing. I'm going to sell some out of the money puts in SoFi at around the $10 range and either collect premium or add to my position if it gets down to $10. Yes. Fed announcement is at 2:00, guys. That's when they come out and say, we're not raising rates today. That's when they're going to give us a hint. I mean, they got to get over this inflation thing already and stop with it's transitory, because it's not anymore, right? So they might say, inflation's not transitory anymore. We're going to have to start doing something about it soon. I think that's what everybody's expecting, right? And then Bernanke comes on at 2:30 and bores us for an hour and a half and talks about absolutely nothing. Usually what I can tell you guys is you'll get a knee jerk today, and then tomorrow and Friday is when you'll get the real move in the market, right? Tomorrow and Friday is when you'll get follow-through either to the upside or the downside. This is usually what happens, either to the upside or the downside, and that'll give us a true indication of which way the market's going to go. So we'll see what happens. I was looking at selling a put 12.10, 12.50, 10 spread. I like it, Voodoo. I like it. So anyone want to talk about a couple? I know we only have a few minutes left, guys. One thing that I want to talk about before we go. Zach, we are probably not making any more trades until after the Fed, unless something sets up for us to do. Like, the video was a very unusual trade down there. That was a beautiful setup. So, yeah, we'll see. Oh, let's talk about AMC for a couple of minutes. My favorite stock in the world. Anyone who's been with me for any amount of time knows that I do not like AMC. I have never liked AMC. I don't like AMC now. I love going on TikTok or TikTok or whatever the hell it is. And there's still people on there, and God bless them. God bless them. The stock's going to 10,000. The stock's going to 5,000. The stock's going to $700. Yada, yada, yada. Again, I go by technical analysis, right? And if I look at this stock on a weekly level, forget about being at 72. We know it was a big meme stock, right? The next level of support I have in this stock is $18. And I think that is a gigantic level for this stock, and I'll tell you why. If we cannot hold the $18 level, and again, then I think all bets are off in this stock. My personal opinion is that this company was in big trouble before the pandemic, right? We know that. It was a $2 stock. Nobody's going to the movies anymore. Things have changed. So anyway, that's how I feel about the stock. I've had a short bias for the last $50. We had a dead cat bounce in this stock from a way oversold position, which is what happened. I mean, we got down to a relative strength in this on a daily chart, guys, of, very, very low historically for this stock. And we had a big bounce from about the 2050 level. Go ahead.
I remember when AMC was, before it was just going straight down, when it was going up and down, you were trading it almost every day.
Absolutely. Yeah. When a stock is volatile like this, it is a great trading vehicle. 150%. What we preach here, guys and girls, is that never get caught in any of these meme stocks. That is a recipe for disaster. We've had
I don't know how you get caught in a stock in general. If you're down 50% and you want to get out, just sell it.
Yeah, well, here's the gig. When AMC was 72, people thought it was going to 720. I mean, when GameStop was $483, right? It was going to 5,000. And
you're telling me GameStop stock isn't going to 5,000?
I think GameStop can ultimately, and not even ultimately, but I don't think it's worth more than $70 or $75.
All right. Well, we know your opinion on AMC
opinion.
and GameStop. I see a few tickers in the chat that some people want me to ask you about. Smith and Wesson, SWBI. I guess a little gunplay here. I don't know. Is there Catalyst? Are we expecting a new?
That's a great question.
When COVID hit, people I don't know.
Yeah, let's go back to the weekly. You'll see when COVID hit, right?
Why? I don't know.
Up to $40. Why? Because the purge was coming.
I know. I don't understand the logic. A respiratory disease is going around the country, so we all need to go out and buy guns. It makes no sense to me.
Well, the same thing. Well, the same thing happened when
Spencer, nice of you to join us.
Thank you, Aaron. Well, glad to be here. When Biden got elected, it's the same idea, right? Oh no, they're gonna do all this gun control. Buy your gun right now. Oh wait, people are gonna buy guns right now. Let's buy Smith and Wesson.
Well, listen, this wasn't the only stock that did that then, right? There's 100 examples of it. But again, let's go technically, okay, guys? We're trading at $18. Look, this is a good company. It's a good long-term company. They're not going out of business. They've been in business for 700 years. $15 is my price. All right, that's my weekly support level in SWC. I'd be an investor down there. $15 is my price. That's where I'd start looking at SWC for a longer-term trade. What else we got, guys? Ford. About 6 people have asked about Ford.
Yeah, I've been seeing Ford thrown out there a lot in the chat, so we'll hit that for you, Lena. And then after that, Darren's asking about some casino gambling plays. I know we used to talk about Donkey Kong all the time.
All the time. We'll take a look at it.
We'll take a look at it.
Look at that one.
Speaking of stocks that have just gotten hammered.
Donkey Kong, yes, 100%. I know it's DraftKings, guys. We call it Donkey Kong. Look, Ford is a beautiful uptrend, right? I mean, that's gorgeous. That is just a spectacular uptrend in the stock. So, look, if I'm looking to get into Ford, you can see here it pulled back to 1870, right? It hit our 15 EMA. That was a nice springboard for it to go higher. So, a couple of places now. You got, let's call it 19 and then 1776 are a couple of good places to get back into Ford. Short term for a trade. Long term, if we can ever get back to the $13.50 to $11 range, that's where you start putting some away. So again, everything I do, even for long-term trades, guys and girls, is based on technical analysis. And when I'm looking at a long-term chart, a daily or a weekly chart, if I get to my 65 or my 200 EMA, those are spots I want to start thinking about investing in a stock. Let's look at the Donkey Kong. And this is just one.
We got a soundboard, David. You like it?
Yeah, that's beautiful. This is like, I don't know. This is one of the ugliest charts I've seen in a long time, right?
They're all ugly. That's the point. They're all ugly.
All right. So look, where's a place to buy this stock? All right. If we look here, guys, when our relative strength got down to about 17, right in here, and you can see we got a big bounce from about 20, a big bounce. Well, we got a bounce from $27 to $33. That's a tradable reversal. So here's what I would look for this thing again, right? If we can get the relative strength, guys, down to 20 again or lower, that could be a stock to buy a little bit of this stock. Where that happens, I don't know, 24, 23, 22. I mean, Penn National's the same thing, right? Same exact chart. Yeah, I mean, it's the same exact chart.
I feel bad. Like, people ask us about like Donkey Kong or AI, right? I see AI in the chat. There's so many of these growth here, or Weejo, right? Like we can't speak to whether these are good long-term plays or not. Obviously, we don't know the future, but like, frankly, it doesn't matter because they're throwing the baby out with the bathwater here. All of these stocks are down, the good and the bad. Does that mean you can come in and like be the hero and buy and catch the bottom? No.
Well, I think a lot of the good stocks haven't gotten hammered like some of these other ones. You know, you look at the Apples,
like what?
the
Apple, Nvidia,
Nvidia.
Well, okay, that's okay. Take away those five. Take away the fangs and then
with you. Stocks are down 50, 60, 70% from their highs.
Ford.
Yeah.
Okay, there are a few diamonds out there, but yeah, ultimately, David, I think you've been doing this maybe a couple years longer than me, the trading,
just a couple.
thing.
He's not that old. Just a couple.
Maybe 2 or 3. But there seems to be this sentiment out there with like these newer traders that are essentially, I've been seeing this thrown around on Twitter, TikTok, like you said, that if they raise rates, it's over. The market's gonna crash. All these stocks are gonna go down. I mean, is that true, or is it more of just like a short term thing?
Well, let's look at history. Has it ever been true?
No.
Have we ever had a crash that the so-called crash that the market didn't come back from? Not once in history.
Hell
right?
no.
That's what I'm saying. Here's the gig. Here's the thing with a lot of we've got 100 million new traders since COVID hit, right? 100 million new retail traders. Maybe I'm exaggerating a little bit. Maybe 5 of them have seen what a bear market is. No trader out there that started trading knows what a bear market is. They wouldn't know. They'd all be out of business, right? I think
David, unless you were around for the financial crisis, you've never. And this goes for Aaron and I, obviously. Like, we've never seen a bear market. I guess
right.
last year kind of counts, but last year was so weird.
What, for 2 weeks? And
right, right.
That's exactly right. A bear market can last for 10 years, guys. I mean, there's been times in history where things have gotten so bad it took 10 years to get back to the places that we were. Yeah. We're not in that environment anymore either, guys and girls. That's never going to happen. Well, in my opinion, that's never going to happen again. All right, it's just not. It's a different time. Things don't last that long. You know, when we were in the throes of the pandemic last year, I said the market would close at new highs that year, and we did. It's just a different market now. You know, we're so forward-looking now that any big thing that happens in this market is just another buying opportunity. That's what it is. My point of this is that people out there, if you want to learn how to trade, you should learn how to be short stocks at times. Because believe it or not, we can make a lot of money when the markets are going down. And that's what all these millennials and new people who are trading, they don't even know what shorting is. They don't even know one side of a trade. That's to buy something and keep buying it and hope that you're right. That's it. And you know, when markets are going down, that doesn't work, but you can be short stocks and make a shitload of money if you're right. And if you just use your technical analysis to find those levels, you can make a lot of money.
The other thing that bugs me is like I feel like people get offended if you express a bearish view on their stock. They almost take it personally, and it's like, why? That's the game. That's it. That's the game you're in, right? It's like there are bulls, there are bears. There are two sides to every coin. Yeah, well, just because someone expresses a bearish point of view on your stock, be it AMC or Apple, frankly, I mean, that's not a personal attack on you. Like that's.
Yeah, exactly. And you know, all of our long-term investments take a hit at some time, and that's just the way it is. My point to everybody out there is you got to look at both sides of the coin, okay? Yeah. And, you know, there's a lot of people that are smart traders out there that take advantage when things go down. And again, I'm talking about trading, guys. You know, we're talking about a lot of different things, 2 different things here. I'm talking about trading, and money can be made when Rome is burning. You just have to know the right things to do. So I'm not talking about, long-term investments when the market crashes, so-called crash, you never sell and you buy more. It's worked for 150 years. But from a trader's perspective, There's a lot of different ways to make money when you're trading, right?
Yeah.
And it doesn't mean it. Look, I sold a bunch of Apple, right? I've owned Apple for 30 years. I love the stock. It's in my opinion, it's the greatest stock since sliced bread, but the stock got overbought. Look at it on a weekly chart, okay? Does that mean I don't like Apple anymore? No, but the stock got way overbought on a weekly chart. You sell some, hoping to buy it back if it pulls back to a cheaper price. So, Dad, I hear something
David, there's a question. What do you think of Elliott Wave? Or Elliott Waves, plural.
For short term, it's more for long-term trading, right? Elliott Waves. And the market moves in different cycles. Well, you know what? For 8 years or 7 years, the market has moved in one cycle up, right? So I don't know. There's people that have been calling for this market to crash for the last 3 years, and it hasn't happened. I don't pay attention to it. Let's put it that way. I don't pay attention to it for the long term, and I don't pay attention to it for short term.
Yep. I think we're all products of the market environment that we grew up in, and for people like myself, for example, like I feel like I grew up in, everyone that basically grew up in a post 08, 09 world, post big short world, had that moment kind of color everything for them. And you have people that saw that movie or read that book and saw what happened in 08, 09, and now they can't help themselves. Now they have to call the top, right? There's always a crash, a boogeyman coming. And eventually they'll be right. But they'll be their timing will be right, exactly. Or they'll be right for the wrong reasons, right? And it's like if you want to be the person to always say, watch out, the crash is coming, fine. But know that statistically speaking, you will be wrong like 90% of the time. Just understand that, right?
I mean, let's go back. First of all, when the sky was falling, this is COVID, right? When the spiders hit 218. When the sky was falling here, we were going lower than that, and the market was just, going to go out of business. So what are we, 2 years now? Almost 2 years, right?
Not even, yeah.
It'll be 2 years in, I guess, March, right? Or February. Look at the market's done. I mean, look at the trend line in this market from a year and a half ago. Look at this, guys. Has it ever even broken the trend? In almost 2 years, we've gone up from 218 to 473, which is about 150%. The trend is your friend, guys. Anyone who's calling for this market to have a crash or whatever at some point, we haven't even broken a trend line in 18 months.
Okay, if I can contrarian, if I can contradict us right now, David, now pull up the IWM. The IWM actually doesn't even look as bad as you would think it does. If you look at the IWM versus a lot of stuff in the IWM actually does not look half bad. But
let's go back to when we were at $96. Okay.
Sure. Wow, is that how low we got? We got to 96.
96.
Wow,
here we go.
Something.
Beautiful uptrend, beautiful uptrend, beautiful uptrend. Still kind of hanging. Yeah. So what is this telling us now? Hey, you want to talk about Elliott Wave and all other people? What this is telling people now is sometimes the small caps are showing us what's going to happen in the overall market, right? It hasn't been the case. The small caps are down in the last, month. We're down 11%, right? We're down 11% in the small caps in the last month. The spiders are 1.5% from our all-time highs. Mm-hmm. So, this to me could be showing little danger signs, but it doesn't seem to matter now. Look, I'm of the opinion we're going to get a nice correction soon, within the next 6 months. And I will put my money where my mouth is by buying VXX calls and stuff like that. But this is a danger signal to me.
Yeah. Also, people are so. People remember, the literal V bottom that we had last year, and they don't want to miss that again. So, yeah.
Look, that was I'm not going to say a once in a lifetime, but I'm going to say that was a generational.
It was definitely a once in a generation type of thing. No doubt about that.
It was a generational trading opportunity, and that's what got all the millennials involved in this market. And it's like the .com in the 90s. You just had to learn to say sold, otherwise you got wiped out eventually, right? Yep. And a lot of these people don't know what the word sold is because everything's going to the moon. That's it. There is no downside, and they keep defending these things no matter what happens. And the short squeeze is coming, and the short squeeze is coming, and the short squeeze is coming. Yeah, well, good luck to you, because the short squeeze ain't coming anytime soon.
David Green joins us every single week, usually on Tuesdays, but yesterday was a weird day. You can see his course. It's Wall Street Global Trading Academy. It's in the description of this video. Check it out, David. It is always a pleasure to chat with you, sir. Wait, did we talk about the Fed already? Right? We did.
Yes, we did.
Okay. I was listening and also multitasking, but we did talk about the Fed. I'm just making sure.
Let me add two quick things, guys, please. Anyone who's with us today, I don't know how many people are here. Go to D Green. What's my Yahoo number? dgreen927.
Dude, I hate that when you have like a thing that you know so well and you just blank on it, and it's like, yeah.
So quick, guys. Anyone who's with us today, send me an email. You can come hang out in my trading room for the next 5 days. Watch us trade live. If you do it right now, you'll be in here to watch us trade the Fed. dgreen927@yahoo.com. I'll let you in the room. Okay.
Yep, it's up there on the screen. Shoot David an email. Say you saw him.
Shoot me an email. You're coming right into the room right now. Do not. And again, guys, Benzinga Pro. It is a tool that is invaluable to everybody in my room as far as trading is concerned. No, go to greenroom-live.com. You got to send me an email. I'll send you the link, guys. Otherwise, you can't get in. The link will not work. The link is down because we don't accept visitors except my Benzinga friends.
Boom.
dgreen92. No, don't go to greenroom-live.com. You can't get in.
Don't do that. Don't click on that link. Send him an email. The email was on the screen.
Correct.
Do that.
dgreen927@yahoo.com.
Right there.
Benzinga Pro, guys, it is the best tool out there. I could not trade without it. It is important to me as any of my moving averages. We're always doing a 2-week free trial, right, guys?
Yep.
Always. Oh, actually, we're doing an end of year special, and that special is. Come on, Spencer. Where are we at? The special is promo code Jolly35 to get 35% off. Jolly as in like Jolly Santa Claus, Jolly, Jolly35 to get 35% off.
Guys, you're silly if you don't take advantage of that, right? And there's a 2-week free trial, so you got to jump all over that. But we couldn't trade without it. Thank you guys for having me.
Of
David,
course,
always
David.
a pleasure. We'll talk to you on the other side of the Fed abyss, wherever that leads us.
Yes, we're either going to go up or down after this happens.
I agree.
That is certainly going to happen. That's certainly going to happen. David, have a good one.
Kyle. All right, you guys too.
Right.
Thank you very much.
All right. How do we get David's email off the screen?
I can do that.
You can do that? Okay. My phone's ringing right now. I'm not there to answer it. Oh, well, tough. Anyway, how are we doing today, AB? What's going on?
I'm good. How are you? I saw Anthony Wilson in the chat asking me how my Robinhood's looking. It's actually not looking too bad today. It is in the red, but we'll see if my plays swing green after the Fed announcement. I did pull the majority of my money out of my Robinhood account just to.
Really?
I needed some cash just for holiday expenses.
Unrelated to the market.
Yeah, just like I'll use this money that's in here to buy some gifts for my family, maybe cover some of my travel expenses, etc.
Well, retail sales in November came in lower than expected. Is that because you didn't do your buying yet? Is that why?
I have not. No, I did zero Black Friday or Cyber Monday shopping this year.
I bought this on Black Friday. This is from Uniqlo. I've gotten several comments today about it. This is the most comfortable sweatshirt that I've ever had in my life. Uniqlo. If you're in the Midwest, we don't have them except for Chicago, really. But they're on the East Coast. They're on the West Coast. They're in Japan. Check it out.
I went to yeah, I do need to buy a new shirt, Voodoo. This is my green shirt though. I'm trying to summon some green today after the Fed meeting with my green shirt. Sue me. But yeah, I actually went to the Uniqlo down in Chicago a month or two ago and bought a winter coat from there. And then I got back here and decided I didn't really like the winter coat. So maybe I'll go return that and get something more like you have, because I do like that, Spencer.
Yeah. Anthony Wilson. Anthony, were you the one that said I look like a monk? Maybe I look like a monk. I don't care. I'm so comfortable right now. It looks good. It feels good. That's all that matters. All right. So long Uniqlo.
Spencer, I didn't know we were doing that. I didn't know we I come here in a polo, nice collared shirt. I didn't know we could just roll up in hoodies.
All right. If that's how you want to play today.
I'm just saying. I didn't know. I'm glad. Now tomorrow I'll adjust accordingly.
That's how you want to play. Fine.
I'll adjust
tomorrow. Tomorrow, AB in his PJs.
Yeah.
All right. Fair enough. Let us know what you guys Let us know what you guys want to talk about. It is kind of a quiet day. We are all kind of waiting on the same exact thing. It's not very often that the entire market is just looking at the same event, but that's where we are today. So there's really not much in the way of movers.
Do you think Jerome Powell knows right now like what he's going to announce? Because I like to think of it in my head that he's just like driving to the meeting, like, all right,
driving to the meeting.
He's like 50-50. He's on the fence, and he's like, I'm feeling like we should push back rates today. Like he's gonna make a last minute decision.
All right. First off, it's a 2-day meeting, so they've been meeting in a conference room since yesterday.
Okay.
All right. I don't actually know what time the meeting ends per se. I just know that the announcement, the press release is out at 2:00. So I would presume that it's wrapped up a couple hours before that, right? Because they got to get the press release out. They got to make sure they're all on the same page. Get him to the podium so he can speak at 2:30. So I don't know. I'm sure that maybe they're done by now. The decision's already made. It's just a question of releasing it, and then the real fun comes afterwards with the press conference, because he gets peppered with questions. And this will be his first press conference in quite a while with like job security, right? Because he just got nominated again for a second term. So now it's like the gloves are off. He already pivoted a month ago. When he said, forget the word transitory, inflation is probably a little bit more permanent than that. So it could be a fireworks kind of day at 2:30. We'll find out. But 2 p.m. for the decision, 2:30 for the press conference. You will be able to watch that on Benzinga. We'll be streaming his press conference, youtube.com/Benzinga. Aaron and I will not be on the air, but we'll be there on the chat. You can watch together with us while we all listen and hear what Jerome Powell has to say. And either things go up, things go down, or things can go sideways. That's always the third option.
Yeah, I'm not very bullish on things going sideways.
If you ever want to have like some like split-second fun, I'm sure those of you who are actively trading have seen this before, but pull up your like level 2 quotes at like 159, or like not even like 159, like 50. Like a few seconds beforehand, and just watch everything just disappear. There are no bids out there. There are no orders out there in the seconds before the press release hits. Like everyone just clears the deck.
Hey, we've got a new AB in the chat. AB says we will likely postpone tapering to the second quarter. Good to know.
Wait a minute, dude. That would be a complete reversal. Hold on, that would be a complete reversal.
Oh my god, a SPY would finish up like 4% today if that happens.
4%? I was thinking like more than that, but that would be a 180 flip.
What's the best? What was the best day for SPY on like during the recovery from COVID?
I don't know. Let's look it up.
Best day for SPY last 5 years.
Can we?
Oh man, I found an article from 2015. That's not gonna work.
Not helpful. Here, let's share my screen. Let's go to my Pro. All right, I have AMC up there, but let's get that off the chart. So, where's my Pro? Come on. There it is. Okay, SPY. Okay, so we're going SPY, and we're gonna go to zoom, and we're gonna zoom out, and we're gonna go to last year. We're going to 2020. We're gonna go to March or April, I guess. I don't really know. This will be a fun exercise. So the best day that the SPY had on any given day during when shit hit the fan last year was on a percentage basis. Oh, that was a pretty big day on March 13th.
What is your method right? Are you just going through each candle? Do you see the biggest one?
Yeah, well, I'm looking at the size of the candle and also the size of the gap from the previous day, right? So let's just keep zooming in here. So what do we got? Actually, let's zoom out a little bit. So like you can see like so March 12th we closed at this is on the SPY. We closed at 248, and the next day we got as high as 271. That's an 8%, 8.5% move. It's pretty big, right? March 17th we closed up 5%. We closed up 9% on the 24th. 24th may have been the big one because the bottom was the 23rd. That was the actual bottom. So March 24th was, the SPY closed up 9%. That was it. That was the best day. The first day from the bottom. There you go. Today we all learned.
Okay, I in this article, this is the Dow, but it says the Dow's biggest point gain day was.
Yeah, but points are meaningless.
Well, yeah.
Points are meaningless.
You're right.
Right?
All right.
I hate that. I hate the points thing.
Okay.
Can we just agree as an industry to stop referring to the index moves as points? S&P up 500 points. I don't even know what that means.
Yeah, it frustrates me sometimes on the radio if they're going through the tape and they're just saying, "Oh, let's check in on the markets." You know, if you're listening to NPR or something, and they say Nasdaq finished up like 18 points today. I was like, I have no clue. That gives me no.
It doesn't tell me anything.
Yeah, I need a percent.
If you ask a random person on the street, actually, Aaron, if you ask Aaron and I right now, where is the S&P? Where is the S&P 500? What is the number? I don't even know, dude. You probably don't know either.
I have a better idea of what like the SPY composite is that people trade, not what the actual
the SPY ETF.
The SPY ETF is.
But if you ask me about the index itself, I have no idea. What is that? Four? I don't know.
Let's look it up.
I have to cheat. I don't even know. Anyway,
the S&P 500 is at 4,615.
Okay. That would make some sense because the SPY's at 40. Oh no, the SPY's at 2. No.
What?
No, the SPY's at 4. I'm looking at the wrong thing. SPY's at 4.
Oh, is it? So okay, I didn't know the SPY ETF was just 1/10 of. All right, the more you learn.
Yeah.
The more you know.
But the point still stands. Okay. We're gonna have our next guest, I hope, on in a few minutes, and then I'm looking forward to 1 o'clock because 1 o'clock is when we're gonna have Joel Elconin on the show. He's gonna bring on Gene Munster and Todd Gordon, and we're talking iBuying. We're talking the Apple car. We'll take questions from the chat. I'm sure the Fed will come up as well. But Joel's got a lot of stuff planned, so that'll be a fun segment with Joel, Gene, and Todd. Very much looking forward to that. In the meantime, if you have any questions, drop those questions in the chat. We will do our best to answer them as we go. Wow, Brian, is that real? VXX? Yeah, I don't really know anything about any VIX-based securities, so I try not to screw around with that. What else did we have today? It's so quiet. Can we take a look at how Lowe's is doing? Lowe's and Home Depot.
Sure. I don't see why not.
Because the Lowe's move. If you guys were there this morning, if you're watching, come on, charts. There we go. Oh yeah, they bought the dip. They bought the freaking dip on Lowe's. This move. So okay, if you missed the headline, Lowe's gave guidance today. Out of the blue, unannounced, not scheduled. They just say, hey, we're going to give some guidance for this year, this fiscal year, and next fiscal year. And the guidance that they gave for this fiscal year for sales was the same number they'd previously given. So they just reaffirmed that. And then for the first time, they gave some expectations for next year. And those expectations were that at a high level, next year is not going to be quite as good as this year. But this year's been amazing. If you zoom out on Lowe's, let's zoom out on that, pull up a daily. Boom. Look at this year in Lowe's. It's been ridiculous. So they said, look, next year might not be quite as good, but in the grand scheme of things, still pretty good. So what did they do to the stock? They punished it. They Lowe's dropped from, in the span of a few minutes, from 253 to, wait a minute. That's not right. 255 to 230, to basically 18 points right there in 15 minutes. And now we're back to the way things were. We're back to yesterday's close, above that actually. So it was a massive.
Damn, son, where'd you find this?
It was a massive buy the dip. The reaction seemed ridiculous to me. It wasn't even a bad headline. They reaffirmed the guidance. So they've already raised their guidance for this year twice. So they just reaffirmed that, and they gave some not blow me away, but definitely not bad estimates for next year. So. Anyway, they bought the dip on Lowe's. I bet you Home Depot looks identical. Pull up the Home Depot chart. Oh, what a surprise. Identical. This was a massive overreaction. Great dip to buy if you were listening to us on Pre-Market Prep this morning. Not always right, but I was right in this case, so shout out to me.
Good job, Spencer.
Thank you. Ooh, that was loud in my ear.
Really?
Okay, you didn't have to do it again.
What is everyone watching right now? Throw some tickers out in the chat. I'm looking for some names that we think are going to be volatile moving after this Fed meeting. To me, it's any essentially high flying growth stock that we've had that have already been getting hammered. If we get that interest rates, I expect those to continue to move lower. So, your Teslas, stocks of that nature can get, Larry, let's check out on the VIX. Let's go to VXX. Currently up about 4%. But if we zoom out about a month on the VIX chart, we hit a high on December 3rd. So what was going on December 3rd? That was after...
That was the Monday...
The big sell-off after Thanksgiving. When Omicron was really like in the headlines. So we're not even really close. I mean, we're the VXX right now, which is just it's a short-term futures ETN from iPath, has it at $22.83 right now, $22.82. Back up on that December 3rd high, we were all the way at $30. So we're nearly like 30% lower than we were just a couple weeks ago. So while the VIX is moving up, it's not like we're at an incredibly high level right now. Of course, very capable of spiking after the meeting for sure.
You definitely want to be watching. So there are two things that I'm watching, right, as it pertains to the Fed. The real ground zero for this trade today is tech on the one hand and banks on the other, right? Tech obviously very, very sensitive to higher interest rates, right? Growth tech. And banks also very sensitive. Those are like the two most sensitive areas of the market as it pertains to interest rate changes or monetary policy as a whole. So let's just walk through some scenarios here, right? If they come out today and the Fed says, yes, we're going to accelerate the tapering, and then we're going to raise rates when we're done. So we're talking about probably a rate hike maybe in the spring, maybe in the summer. Somewhere in that ballpark. That's about what is expected right now. Somewhere, a rate hike at some point in the first half of next year, probably towards the end of the first half of next year. That happens. The initial reaction, probably, tech sell-off and maybe some buying the dipping after that, because that wouldn't be a surprise. But tech would react to any confirmation of rising rates. So that happens. We get tech sell-off, and my hunch would be we get a little bit of a buy the dip action after that. Rising rates is good for banks.
Well,
right?
Here's a question I brought up earlier. So I'm seeing SoFi thrown out in the chat.
Yeah.
SoFi is a growth stock. It's a tech stock. But it's in the financial space.
Yeah.
SoFi, I think, long-term will benefit from a raise of interest rates, but I don't think investors will act on that right away. So I think if we see that raise in rates, we'll see SoFi get hit. But maybe that makes it, say it goes from $14 to $12. Maybe that becomes a better buying opportunity, because then in the long term, as they're doing their lending practices and whatnot, they're actually making more money. I could be wrong, and SoFi could move with the rest of the financials, but it's not seen as a value stock like Bank of America, Goldman Sachs, JP Morgan.
That's a really great point. Sometimes you have to think of less about what does the company do and more about how are they grouped in investors' minds.
Oh, they're grouped like Robinhood, growth,
right,
tech.
Exactly. SoFi might as well be a bank. I mean, they're going to be a bank one day.
We've been saying this for how long?
But Wall Street does not think of SoFi as a bank. They think of SoFi as a growth technology play, a fintech play. And therefore, that's the predominant sentiment, and they're more likely to move with tech than they are to move with the banks. Whether or not that changes, Aaron, I guess it's sort of up to the fact that it depends on whether they get that bank charter or not. But when I say banks, I don't mean like SoFi. I don't mean all financials. I don't mean Visa or PayPal or MasterCard or American Express. I mean like the big banks and the regional banks too. I'm talking like
course.
Goldman, Morgan, Morgan Stanley, JP Morgan, Citi, Wells, Bank of America, the regionals, right? Your KRE, right? That's your regional bank ETF, your main one.
Someone in the chat, I'm not going to say their name, but brings up a good point. Lending Club is kind of seen like SoFi, even though it technically is a bank. They're seen more on the growth tech side and less on the we'll call them legacy financial side, right?
Yeah.
You've got your legacy financials, the names you just rattled off: Wells Fargo, J.P. Morgan, Morgan Stanley, but. Yeah, so those are certainly ones you can play. Someone else is asking about silver. I don't really care about gold and silver. I think it'll be more interesting to see how Bitcoin and the cryptos are moving.
That's a good point.
Fiat King, Spencer and Abe, are you long SoFi? Yes.
Yes.
Long term though.
Yeah, I'm not long enough like for it to kill me. Like, I'm not sweating that it's down. I'm down. This is my biggest bag right now. Actually, it's kind of my.
There are a few stocks out there that I think
right
truly have the potential to, 10x in the next 10 years, reshape the industry that they're in, and SoFi is one of those.
So yeah, SoFi is. I'm down in a couple of stocks right now, and SoFi is the only one of those that I'm not going to sell to do some tax loss harvesting this year. I'm just not. But again, I own it's like 2% of my portfolio, right? Like 2% we're talking about. So I'm not sweating over it.
Yeah.
So yeah, I'm down. It's my biggest bag. I'm down $6 or $7 in it per share. But I ain't sweating.
Yeah, and everyone too. I mean, if you're taking in a lot of just financial media in general, whether you're on Twitter, Reddit, whatever you are, YouTube, you'll see a lot of what I would consider kind of borderline fear mongering about a market crash and a bubble and all this. And I'll just say this: there are certainly assets out there that you could argue are kind of in a bubble environment right now, right? But that doesn't mean the overall market is. And if you look at companies like Apple, even though Apple's at all-time highs and nearing a $3 trillion market cap, becoming the first company to reach $3 trillion, its PE's around 30. It's not crazy overextended. And a lot of these valuations actually make sense when you look at the interest rate environment that we've been in. So I don't think it's, I don't know. I've just been seeing that out there, whether it's on Twitter, TikTok, wherever, oh my God, if the Fed raises rates, we're going to see the bubble finally crash all this. It's there are certain assets that you could argue are in a bubble environment, but not the overall market.
I always think back to, since you mentioned Apple, Aaron, I always think back. So, 2015 was when I first started to consume a lot of financial media. And I remember, I hadn't really planned out I hadn't really thought through my investing philosophy prior to that. I had some investments, but I wasn't really paying attention to it. And 2015, 2016, I spent those 2 years doing nothing. I spent those 2 years waiting for a crash. And then 2017 rolls around. Let me pull up the SPY. 2017 rolls around, and I was like, what am I doing? Why have I'll end up waiting forever. Or in this case, it ended up being 3 more years, right? 2020. But you can't wait forever. You just can't. At some point, you got to take the plunge. So waiting for a crash is just not a prudent strategy, in my opinion. And I did it, and I regretted it.
100%. I mean, you have that guy. What's the author's name from Rich Dad Poor Dad? Who's called for a crash?
Is it Kiyosaki?
Yeah. No, not Kiyosaki. Is it?
Yeah.
It's something like that.
Yeah, it's Robert Kiyosaki.
Robert Kiyosaki. All right, y'all. Well, like I said, keep throwing some tickers in the chat what you're watching today. I see Franz is saying lemonade is green. I saw Hims, one of the rare stocks that's out there, is green today as well.
Is that the one that I never heard of that you made fun of me for?
Yeah. Again, I made fun of you because I swear to God, every single time I'm watching a live sporting event or something, they have a million commercials for Hims and Hers all the time. Tell me if I'm wrong. Have you guys not seen a bunch of advertisements for Hims?
Sorry.
And then they IPO'd, and it was kind of a big deal when they IPO'd, and then I don't know. Spencer missed that one.
I missed that one. I was sick that day.
He was sick that day.
All right, our next guests are here. Actually, I think there's 2 of them joining us.
Oh, beautiful.
Yeah, I knew we would have Suresh Venkatachari on. He's the chairman and CEO of Healthcare Triangle. I did not know he would be bringing a friend. Can we bring them both on right now? Suresh and Shibu, welcome to Benzinga Live.
Hi.
Yeah.
Nice to have you.
Yeah. Thank you
So
for
wait.
having us.
Just to clarify, which of you is whom? Who's whom?
This is Suresh.
Okay.
And
And then Shibu is on your right. Got it. Okay, so we're talking. First, actually, I guess we should start with this healthcare triangle, HCTI. What do you guys do?
okay, we help hospitals and pharma companies in terms of their digital transformation journey, which includes cloud migration, building the data analytics using artificial intelligence, and also host their electronic health record system in the cloud.
Okay. So are we talking like you're competing with whom? Like Amazon or Microsoft?
No, we don't compete with Amazon or Microsoft. We are one of the premier partner for both AWS, Amazon, as well as Microsoft and Google. We help their infrastructure, and using their infrastructure, we bring the clients' data into the public cloud. We partner with all the leading cloud vendor.
Okay, so we're talking mostly just hospitals, right?
Hospitals and pharma companies, like pharma and life sciences companies.
Okay.
So I understand we had some news come out this morning from your company. Do you want to go ahead and kind of give us a brief rundown on that news?
Yeah, so that news I like to give a few highlights. So this is one of the Native American hospital, which is Sage Hospital, which was running a old EHR for last 20 years. And we moved them into a SaaS-based model, Meditech as a service, to improve their entire management, patient care, and ambulatory. And it is it's a lot of challenges they had because they had a 20 years old system, which we moved them very successfully into Meditech as a service. Meditech is one of the leading EHR, electronic health record, and we are a partner to implement and drive that project. But I would also like to probably give you more insight on the acquisition, which we made announcement a couple of days back. The reason I brought Shibu for this call today is Shibu heads our M&A and also healthcare expert.
Okay, and you're referring to DevCool, correct?
No, Shibu is actually part of Healthcare Triangle. Both of us are part of Healthcare Triangle.
Right. But I meant the acquisition from a few days ago. That was DevCool.
DevCool, that's right.
Right. Okay. So what was the point of that?
No, I want to say that because combining like this hospital we solved today, the Sage Hospital, but going forward, combining with DevCool, we could able to reach more number of hospitals because DevCool service the number one leading cancer research center in the country, and also the service for about a top 6 institution hospitals out of 10 in the USA. And with the combining with Healthcare Triangle and DevCool, it helps us to scale very significantly. And also the important thing is we were around like a $33 million revenue, and with a $20 million combined, now we are in around a $55 million range with a EBITDA positive, accretive, about like a $5 million, except other than one-time IPO expenses. So it is really going forward, it's going to scale the organization very successfully. And having the DevCool's leading customers, which will help us to host their bigger application like EHR applications like Epic and Meditech into the public cloud like Google and AWS, which will give us a more annuity revenue stream and a recurring revenue and a stickiness to the customer.
I'm curious, like, what is the sales cycle like? Because I think most people probably maybe they don't assume that, but like I've heard just hospitals are known for having like old, like outdated like software and like running on like Windows XP or Windows Vista or something like that, right? So like I would imagine it's not very easy, and it probably takes a while to actually close one of these deals and get into these hospitals. Is that right?
No, you are partially right, exactly, because most of the hospital, like a Sage Hospital, was running in a very old, 20 years old system, Magic, right? We moved to exactly like what you said. But there's a lot of leading hospitals are advancing into the digital transformation. And more importantly, post-COVID, all the hospitals are now adapting to moving to the public cloud for multiple reasons. One is it helps them to manage patients remotely and provide the telehealth. And secondly, it saves a significant amount of cost. So it's a great advantage. And Shibu, you want to add something on this?
Yeah, absolutely. In fact, when you really look at two aspects, what is going on with the healthcare industry. One, they all have to adopt electronic health record implementation. So that's the one area which we are helping. And with the acquisition of DevCool, that is one area where we will have a lot of opportunity to work with the hospital, because that's a mandatory aspect of a hospital, right? In order for them to have a better efficiency in their revenue cycle management, getting them paid soon, and handling the patient data. So the electronic health record is something which everybody, irrespective of any hospital, need to go through. And DevCool is a champion in that, and we've been traditionally also doing it, right? So that's a great opportunity for us to continue that area. The second aspect, which you brought, right, in terms of adoption to cloud, in terms of doing the digital transformation, that's where traditionally there was a challenge with the hospitals. But like Suresh mentioned, the post COVID and with the latest telehealth, almost 300% growth in the telehealth, and the need for interoperability, and all the patient data need to be shared with the multiple hospitals. Now that brings us great opportunity, because traditionally healthcare triangle has two great competencies. One, in helping the customers adopt cloud, and two, help them on compliance and security. These two are our key strength. So when these providers or pharma companies, when they adopt this digital transformation, cloud adoption, etc., they are not looking at a one-off implementation or a one-off partner. They need a holistic approach. So companies like us, who can help them adopt that digital transformation along with security and compliance, is the key strength what we are bringing to the table and helping them.
Got it. All right, Suresh, Shibu, a pleasure to chat with you both. Again, healthcare triangle. Thank you both so much for joining us today on Benzinga Live.
Thank you for having us.
All right. We are all locked in on the Fed here today. Thank you, Aaron. Can we look at Pfizer, Aaron? You want to pull up that Pfizer chart?
Yeah, I can do that.
Did you notice Pfizer at all-time highs today?
I did not.
Yeah.
Someone was asking earlier about the. You want to go ahead and throw my screen back up?
I do.
Someone was asking about the COVID trade earlier, saying, "Hey, COVID's coming back. Should we be looking at the COVID trade?" To me, it's not that interesting, but I can't argue with the tape. And Pfizer's at all-time highs. We can go to Eli Lilly up 10% today.
Well, they actually gave good guidance this morning. Is why they're up.
Okay.
Yeah. By the way, and if you watch pre-market prep, don't give Aaron the answer. This morning we all learned, and by we all I mean me and Joan and Dennis, we learned the difference between pharma and biotech. Do you know the difference between pharmaceuticals and biotech? I didn't know before today.
I would guess that a pharma stock is a company that currently has drugs on the market that they are selling, while a biotech company is one that is producing the technology for drugs.
So that's a great guess. That also would have been my guess if I had guessed.
Okay.
But according to Google, because several people had to tweet at me the answer to this question because we didn't know. According to Google, biotech includes products that arise from biology and the earth, right? And pharmaceuticals includes companies that are includes companies that are working on like drug development. Wait, what? Hold on. I'm not reading this right.
Stop it. Post the real answer.
Stop it, Spencer.
So okay, I think that makes sense. Like a company that's making like a new heart monitor that you can connect to your phone would be a biotech stock, but obviously not a pharma stock.
So like pharma relates to biotech refers to like products that arise from biology, if that makes sense.
Okay.
Right? And then pharma is the next step. Pharma is like, okay, taking whatever that technology is and then turning it into a drug. That's the difference.
That's kind of what I said.
It is kind of what you said, actually.
Okay.
So basically, if you're making a drug, you're a pharma. And if you're making something behind the thing behind the drug, the technology behind the drug, you're a biotech. Today we all learned it. By we all, I mean Aaron and I.
So we have Pfizer is doing well today. Moderna not so well. Pfizer's at all-time highs, while Moderna's like, what, 40% off of its highs? 50% maybe?
Right. And again, what is Pfizer? Pfizer's Pharma. What is Moderna? Well, Moderna's kind of both, but Moderna really is a biotech, right? Because it's got the mRNA technology. That's really what it is.
Yeah, I think, I don't know. I mean, I think we've talked about this before. Trading biotech stocks, it's like kind of being at the casino, right? You have all of these companies that are pre-revenue. It's all a gamble on if their drug gets through that pipeline, gets that FDA approval, they pass their PDUFA date, get approved. I don't know what the right terminology is there. But with the actual,
far, so good.
what the actual pharma companies, whether you're looking at AstraZeneca, Pfizer, whoever it is, you have actual financials to go off of. So I don't know. I just think long term, I think we're going to see big shifts in the kind of like big pharma space.
It's crazy. Can you pull up a stock? Can you pull up MDT, Mary Delta Tango? This is Medtronic. This has been one of your best performers, not obviously right now, but if you zoom out on Medtronic, like several years, the stock has been an absolute monster. This is medical devices.
Okay.
Them, Medtronic, and what's the other one? Oh, ISRG. I got that one up on the screen. Intuitive Surgical. Let me pull up the weekly of that. Look at ISRG. This is again medical devices. Look at what a beast this stock is. It's one of the best performers of the last decade. Right?
Yeah. You know what was a really interesting here, wait, I'm gonna have you guess something.
We should do it. We will do actually a name that chart. This would have been a good one too. Darn, I blew it.
We'll do a name that chart today. I saw someone
Yeah.
else in the chat was asking for another crypto update. We will get to the another crypto update real quick, but I just want to.
Well, while he does that, I have to find a chart to do a name that chart. So, and I'm not taking any advice from the chat.
Isn't it United Health? Isn't that the big
UNH? Yeah.
UNH? Okay, why?
All right, I think I have one for name that chart.
Okay. All right, so I'm looking at the. I gotta pull up the chart so y'all can see it. I'm looking at the daily chart for United Health right here, and I apologize, Spencer. I know you prefer the white background.
That's okay.
So I'm going way back to 2020. We see the big COVID drop right here, but what I'm showing you right here is I'm zooming in on this green candle right here. On March 2nd, United Health was up 7%. This was before we had kind of COVID moving the markets like crazy. Do you know what this event was that caused United Health to go up 7%?
This was last spring?
March
Yeah.
2nd, 2020.
March 2nd, 2020. And it's UNH, so it's a Dow component.
And it actually went up.
I assume you know the answer to this.
I do, because I was like I was actually like trading this.
No, March of 2020. And
It's not COVID related.
It's not COVID related. UNH is a health insurance.
Right,
play.
but it's any like big pharma company you want to look at. It had this big spike. So what's another big pharma company?
What was it something out of DC? Out of Congress?
Not necessarily out of Congress.
Out of
DC related.
Out of the White House?
Kind
The
of.
Supreme Court?
No. You're like tangibly, you're getting closer, but
help me out here. I don't know.
okay. So this was during the it was the Democratic presidential nomination. So earlier in February when they had the first primaries.
Crackdown on drug pricing.
Well, no. So Bernie Sanders basically won Iowa. They said Pete Buttigieg won, but I don't really know what happened there. But then Bernie Sanders went out and won Nevada, and it like looked okay. He's for sure gonna be the nominee. And then March 2nd was Super Tuesday, or March 3rd was Super Tuesday. So the day like 7 more states voted on their primaries, and that's where it became clear that okay, Biden is now the favorite. For a while, Bernie Sanders was the clear favorite, and then Biden became the favorite. And they basically, investors said, okay, if Biden's gonna be the nominee, then we're not as worried that United, and you could see United Health getting hit when it looked like Bernie Sanders, because of course the fear for investors there was that he was going to come in and say, we're not going to make the healthcare sector for profit anymore.
Got it. Oh, good. I forgot that Super Tuesday was right in the midst of
before COVID.
shit.
Yeah.
No, it was during COVID.
It was during
because
it was the first week of March. So you had throughout the world, a lot of companies had like first started, kind of shutting down their. I remember for some reason like Porsche, their factories in like Germany that shut down. That was like a big headline. That was one of the first companies that. But yeah, so that was, it was just so interesting because it looked so clear on the chart that, oh my God, Bernie's coming in. We got to sell all our healthcare stocks and our insurance stocks and our pharma stocks. And then, what do you know? Biden came out of the woodworks, came out of nowhere and crushed it on Super Tuesday. And those stocks flew the next day.
All right. You want to do a name that chart right now?
Yeah.
Should we do it?
Let's do it.
Okay, I have a chart. I'm going to pull it up. No y-axis. This one might be easy. I apologize if it's easy. This is almost a 3-year chart. It goes back to the beginning of 2019.
Wait, okay. Can I guess?
Yeah, you can guess.
Boeing.
I'm not going to tell you if you're right or wrong.
Boeing.
I said I'm not going to tell him if he's allowed to guess, but Aaron can't win.
If this isn't Boeing, then Boeing's chart looks a lot like that.
Okay, should we do a new one? It is Boeing.
Okay.
It is Boeing.
I only know this because I was just looking at the chart the other day.
All right, forget it. Fine, Aaron ruined it. All right, let's do a different one here. Let's take it off the screen. We'll do a different one. Here's how name the chart works. I put a chart up on the screen with no clues and no y-axis and nothing. And you put the ticker in the chat. And the first person that we see that threw the ticker in there, the correct one, will get some free Benzinga swag. Okay. Fine. That was. I said it might be too easy, and clearly it was too easy for Aaron. So
I literally had just been looking at that chart. I want to say on Monday, 2 days ago, because I was curious because Boeing was one of those companies that like recovered really well off its lows and had a good positive trajectory, but then couldn't get back up to its previous highs, and then had that kind of downtrend.
Well, it's because of the 737 Max chaos that they had going on. They had a couple of crashes. Okay, fine. Let's do this one. This one's certainly harder. And I will pull up the price axis.
So EDD's asking what time is the meeting. We get the announcement at 2 p.m., so in about an hour and 12 minutes, and then the press conference to follow at 2:30 p.m. Eastern.
Okay, this one, and again, I will bring in the price axis here, but this is also almost a 3-year chart. And if I don't see I don't want to give any hints. I'm not going to give any hints. Just curious to see what y'all see, and if we go a few minutes without any correct tickers, then I will throw the y-axis up there so we can get some more clues. It is not Tesla's chain B. Very good guess. It is not. Yeah, Shelly, that's right. Shelly, you already won. Also, let us know if you got your swag. I have a hunch I'm going to have to move the y-axis on screen. NVIDIA, Microsoft, no. Lucid Shop. See if I'll give it like a few more seconds, and then I will throw the y-axis up there. Can we get some tunage? Do we have tunes?
I
hate the stocks I'm holding, that's for sure. Twitter, Neo. Okay, so I'm gonna move the y-axis on the screen.
Not like that.
All right.
Here comes the money.
Here we go. Money talk.
Here comes the money.
It's a little loud in my ear. Is that just me? It's loud. That's better. Wait.
I was confused because we have this one and then are they like?
Here we go.
Okay.
Money talk.
Here comes the money.
I'm sorry, I'm trying to stop it, but if I hit it, I guess it just plays it again instead of turns it off. I'm trying to stop it. Calm me now.
I'm trying. He said. Wait, you can't end it for real?
I don't know.
All right, no more of that. Let's get rid of that sound effect. Okay, no, I've not seen the correct answer yet. It is not GE or Salesforce or Neo or WWE
All right, give us a hint.
or Coin.
We have the price and we still don't know it.
This is interesting. Okay.
240.
The hint would be that they report earnings this week. That would be a hint.
It's a big hint.
It's not Salesforce.
Twilio. That's a good guess.
Let me confirm that we didn't already have it. It's not Roku. It's not GameStop. Come on, GameStop. Come on, people.
There aren't any earnings reports this week.
There are a couple of them. Well, we got it. Who got
FedEx?
it first? Who got it first? I was scrolling up and then I missed it.
Yeah. Quantum, it looks like.
Okay, Shelly's quick. So Shelly got it. Shelly, you already won. So we're gonna wait. Didn't C Hodge already win? No, C Hodge is new, I think. C Hodge, you were late by a smidge, but we're gonna give it to you because Shelly, you won. Name that chart like 2 weeks ago. So, C Hodge, FedEx is the answer. Congratulations. C Hodge, here's what you got to do. Email us. shows@benzinga.com. It's going up on the screen right now. Where's the email address that's not on the screen? How do I get it on the screen? Where's this darn banner? Okay. shows@benzinga.com. There you go. Shoot us an email. C Hodge. We will send you some swag. Swag. Okay, that was a fun segment. Let's do this though. It is almost 1 o'clock, and as promised, we're gonna have a fun segment here at 1 o'clock.
Who's joining us in a couple minutes?
Yeah, so in a couple minutes, we're gonna have Gene Munster, founding partner of Loup Ventures. The guy was so bullish on technology that he gave up his career as a sell-side analyst to run money and do some venture investing. And then Todd Gordon, a long-time trader, is a CNBC contributor. He runs a wealth management firm. They'll both be on, but moderating the chat with them will be the one and only Joel O'Connor, who's here right now. I guess we should bring him on. I think he's ready. We should bring him
Mr.
on.
Joel O'Connor.
What's up?
Good afternoon, Spencer.
Happy Fed Day.
Yeah, do you bring that same energy to the afternoon show that you do in the morning, or does the youngster have to pick you up a little bit?
Are you referring to him?
Yeah, he's the youngster.
No, I have energy. Do I have energy?
Yeah, Spencer's got good energy. I thought Joel was asking about when he said afternoon show. I thought he was talking about at the close. So
No.
Well, usually by that point I'm running on fumes, but I'm good. I'm good right now. Joel, give us a quick preview. What are we about to talk about with Todd and Gene?
Oh my gosh, I should have scheduled this for 2 hours, 47 minutes, and 38 seconds. We're gonna talk to these guys. First, I'm gonna throw them a little curveball because now they're money managers. So I just want to talk about the transition from being that the analyst. Well, Todd is an analyst in his own right, and running money. It's difficult. But then we're gonna discuss, is the real estate tech sector dead or not? Okay. Because there's going to be some rotation, right? Is that going to be, you want to buy some beaten down stocks? There's some beaten down stocks. How can we not talk about the metaverse? I mean, we're all going to be spending a majority of our lives in the metaverse. So we're going to discuss the metaverse, not only the companies that are doing it, but is there ways to profit from the upcoming metaverse? If you have Gene Munster on, you got to talk about Tesla, right? You got to talk about Apple. So we're going to cover that, autonomy. And then, Todd threw in a note about Netflix. I know Gene has some opinions if we get to that. So, oh my gosh, I got 2 sheets of notes. I sent them to you, and really looking forward. And glad you guys are putting that here on the afternoon show. I kind of miss being at that desk there, but we'll see what happens.
Well, Joel, you're going to have to fly through to get all those topics in. I know for me, one of the most interesting things that Gene has done, well, really just his whole call on being bullish on Apple so early. And then he kind of repeated that with Tesla. So if you can squeeze it in, I want you to ask Gene kind of what it was specifically about Apple that he saw so early on, so that I can eventually try to recreate that and find the next Apple.
Okay. All right, that's what did he see early on?
You know,
Yeah,
like
that-
was it something on the business financial side? Was it more just in the technology? Like, oh my God, this iPod is so far ahead of every other MP3 player. I know Gene used to like camp out at Apple releases and whatnot. So that's my end goal, Joel. Is I want to find, you know, whether it's I don't even know if the company exists yet, but I want to find that next Apple.
Okay, and we don't. I know Spencer can dig it up, but I know there's a real old picture of Gene, right? And he's got you know, the iPods on, and he's dancing around.
Yeah.
Remember that? Remember that, Spencer?
I do remember that picture. I have to dig it up somewhere.
Yeah, but no, I mean, you know, as in Malcolm Gladwell terms, you know, what was the tipping point? You guys have read any of those books, or
Yeah,
you guys
yeah,
don't read?
those are good books. Outliers.
Yep. A couple of them are good
Blink.
ones there. Blink. Yep. So a couple good books there. Good. You're learning.
I've read a lot of. I know. I've loved those books, like especially when I was younger, like in high school and college, and then I've read a lot of criticism, like of Malcolm Gladwell.
Me too, actually.
Just that he reinforces his arguments with like very anecdotal story, you know, and I don't know. So maybe I'll have to go back and read some of them with the new light. I don't know. I still enjoy the reading. He's a great writer.
And it's it's that Mizzou in you, that journalism school, right? That brings that out in you in the education. But all right, so what do we have? Anybody in the green room yet, or?
Yeah, I see some people.
I see
here.
Gene. We need his camera on though.
Gene is not going to be on camera today.
He's not going to be on camera.
Yeah.
Okay.
Yes.
Well, every time he goes on CNBC, he puts his camera on. I'm just messing with Gene. We've interviewed Gene a couple times on Benzinga. We love having him. Some great insights and content from Gene.
You know, the only person that's got a nicer setup than us is Todd Gordon, and I see him here right now.
Yeah.
As well. So you know what? Since we're going to run out of time anyway, we might as well just start this now. So let's bring on Todd and his beautiful setup there. What's up, man?
What's going on, guys?
And we'll bring on Gene. Gene in here, audio only. Gene, are you here?
I am here. Can you hear me?
Okay, we got Gene on the phone, and we got Todd from... Todd, you just revamped your entire studio. Well, not just, right? But, like, you did it a little while ago, right?
You should see over here. I've got boxes everywhere, and I'm sorry for this mess. I'm trying to up the technology game. We're in a tech bull market, so I got to get with the times.
That's it. All right, we have a lot to get to, Joel.
Yeah,
Go
did you
ahead.
get the introductions in there? Let everybody know the two superstars that we have joining us this afternoon.
I mean, we just introed them. All right, Gene Munster, Loup Ventures, founding partner. The guy was so bullish on tech. He's like, I can't be an analyst anymore. I have to invest. So he went to start his own venture firm. The name of that firm is Loup Ventures. And Todd Gordon made an amazing career pivot. Todd, I've been meaning to pick your brain about this because you were like, I need to run some money too. So that's what you did. You became a financial advisor, and shout out to you both for making the mid career pivots like that. Both longtime friends of the show, so we appreciate you both coming on today.
All right, I just kind of want to
Appreciate
start
that.
with that, and start with you, Gene. I mean, you made the pivot a little first, going from Piper Jaffray, Piper Sandler, out on your own. Can you just was it harder than you thought? Was it easier than you thought? And then kind of what's been your takeaway? You got a couple years under your belt, so just tell us that real quickly to get started.
Well, everyone, before you do it, before you make that leap, everyone tells you it's a lot harder than you think it is. And so I was bracing for the worst, and I think that when we started it was January of 2017, and we've told the team, we've had basically the same team all along. We've told the team that we have 5 years of a commitment to suffering, and that includes just the amount of work and the amount of compensation and just building something. And so we started with that, and it's been 5 years of suffering. And I'm happy to report our 5th birthday is coming up around the corner, and we can just start to rest a little bit easier that tip of the bow is always going to be above water. And the other piece to it too is that it's all about performance, and I think that that's moving in the right direction. Hope it continues. And so, to answer your question, it's hard, but I expected it to be hard. And I think back and would just say this: if anybody's thinking about doing their own thing, if you're feeling called to do something, I would do it. If you have a career that you love, I would stick with what you're doing. But it really is the difference between a career and a calling. And if you feel that, Geronimo.
Okay, Todd, and what brought you over from the trading side, the analysis side? I know you've built up your product and everything. What made you take the leap into money management?
Yeah. Hey, thanks for having me, guys. Hey, Gene, how are you? Haven't seen you since the Fast Money set. You said
Want
you
to be
have five.
back?
Yeah, I can't wait to be back too. So you said you have 5 years of suffering. We're 3 months into launching the RAA. So 4 years and 9 months to go. No, it's been a lot of nights, 11, 12, 1 o'clock, working. I haven't worked so hard. But to Gene's point, it takes a kind of person to want to run your own business. I mean, you look at what Jason just did with Benzinga. It's a calling. I actually did join up with RAA for about 9 months, and they're wonderful people, still friends to this day. But just to put a little bit more context behind that, I have never been so stressed working for a real billion-dollar wealth management company, having to kind of fall in the corporate line. I work much harder, much better as an entrepreneur. So I totally agree with what Gene is saying. If it's your calling, do it. And then the second part of your question, Joel, I always try to run trading analysis, just as you guys do. It's a non-regulated business where the barrier to entry is very low. And the trading education business, there's some wonderful people, and then there's some less than reputable operations. And I always try to run trading analysis with a responsible message, just like Benzinga does, which trade with a certain amount of your capital, have risk parameters, trade enough so that hopefully you can add some alpha to your return, but do so within context of your overall portfolio. And that overall portfolio should be professionally managed. And I always showed 2 buckets: my longer term accounts and my short-term accounts. And I always try to kind of make that responsible message. And I think that should be for everyone in the short-term, medium-term trading world. And then obviously the move into RAA, I think, was a natural step. So it was all being set up over the last 10 years to make this move.
Okay. All right. So we got a lot of topics discussed. We got about 25 minutes. So I want to, with the first topic here, I want to get a minute or so out of each of you, and then we'll move on. You got the Fed. You got higher interest rates. You got a Fed meeting coming today. Just short-term and long-term, do you see having to make major adjustments to your investment strategies? Gene, I'll go to you first.
Yes. Do you see adjustments? I think that the market does a great job anticipating, and they've probably factored in what the Fed's going to say today. But what I don't think is factored in is that the Fed is, the Fed is in the process of ending the relationship with investors about easy monetary policy. And when you do that, you just think about a relationship, like almost like a dating type of relationship. The best thing to do is just let them down easy. Do it over a period of months. Start to kind of change the language a little bit, and versus just dumping. I don't think the Fed is going to dump investors today, but I think that's where they're going, and specifically about more rate hikes and a steeper curve than what's been anticipated. We can talk about why I believe that. But the way I play this forward is I think that the market probably is up after today because of all the anticipation, and bet the language is going to be somewhat kind of soft landing-isk. But then we fast forward to the end of January, and we've got
Did we lose Gene there? Gene, you with us? Can anyone hear me? You guys hear me, right?
I hear you.
I'm not crazy.
Yep.
Okay.
Yep.
Okay. Well, we may have temporarily lost Gene. We'll try to get him back.
The technology analyst, Gene, you better come back. All
Might
right.
as well throw it to Todd.
Yeah,
then,
let's
right?
throw it to you, Mr. Gordon. Here you are. Early on in your career, 3 months into it, it's been a nice bull market here. People are always looking for diversification. Boy, oh boy. I mean, you got to take it step by step. But how are you approaching the Fed?
Well, yeah, it's unbelievable. We've listened to the calls for runaway inflation since like the first edition of QE. I remember trading for the foreign exchange fund in New York, trading the yen carry unwind when the first the credit crisis hit, and then QE came, and QE2, QE3, QE4, and then infinity, or was QE4 infinity? I don't remember, but the calls for the destruction of the dollar. Rampant inflation just did not happen. It did not materialize. It took, 10 years now for a pandemic. The government's response to this finally did injecting money directly into the consumer's hands rather than suppressing interest rates. Did finally, buck that downtrend. Are rates going to spike? I think the downtrend in rates has been in place since, I've been out of diapers. I hate to say it, 40 years now. I think it's a bold call to say that rates are going to move up after a 4-decade downtrend. I think there's a lot of deflationary forces in certain pockets, kind of borrowing a page from Kathy Wood's book in terms of the demographics, the technological deflation. There's a lot of things that are happening. I think our demographics, people are getting older, people demanding yield, globalization is exerting downward pressure, but it was a short-term man-made recession response to the pandemic, flooding the economy. So am I going to say we're going to do a big value, big rotation out of tech? Hard to justify the big multiples. No, I think this is December. I think this is sort of a weird end of a weird year. We were expecting some legislation to change where, capital gains was going to go. I think there was obviously a third year, I think, in a row of double-digit gains. I think people are taking profits on tech. I'm seeing large cap tech perform relatively well outside of the last week. Value tried to go over the last year, but then growth first value moved up. I love that this market. I don't like this little pullback. I hate seeing a little bit of a drawdown here, but I think longer term, we're in a tech bull market. I don't think rates are going to spike. I do think inflation is not transitory, but maybe perhaps we're going to deal with it, supply chain issues over the next 1 to 2 years.
You know what, Todd? I think me and you are the only guys on the street that are looking for a soft landing here. Everyone's looking, for the Fed to just blow us up and crash and burn.
No way.
I think the transitory, he removed that statement. I think he's just buying a little bit of time. Crude oil prices are coming down. Work through the supply chain shortages. So I mean, opposed to the Bears, Dennis and Mitch in the morning, I'm kind of with you on that. All right, let's move on to the next sector. There's always rotation going on, right? Whether it's growth to value, staying home versus reopening, and long-term investors like Warren, they like to buy things when the prices are low. And you guys have a little different opinions on this one, but real estate tech, I mean, is that dead? Gene Munster doesn't think so. So, Gene, just we'll turn it over to you now and just talk about, can investors really make money in this sector now moving forward?
As a starting point, I've been wrong on this. I thought that the back half of 2021 was going to be a good year for real estate tech. I believe that Zillow was going to take their top of the funnel, their 220 million monthly active users, and channel that into iBuying, which if you're under the age of 40, that's how you want to transact. You don't want to deal with the typical real estate agent and the mind games that go on there. You just want to set price. And so I was wrong. I do stand by a belief that there is still life in real estate tech. We are holders of Open Door and Redfin, and on the belief that in Redfin's case is that consumers are getting more price conscious around realtor fees, and I think that they have a national brand around lower prices for broker fees. And separately with Open Door, obviously that's a play on iBuying. And shot across the bow, Zillow exiting, I think it made understandably a lot of investors feel that you'll never be able to make money in iBuying. I disagree, and I think that if you fast forward, I don't know if this is going to take on as a theme for 2022. Probably unlikely that it's like some Nirvana theme.
Okay.
But I do think that there's value here, and Warren Buffett approach, I think, would say to capitalize on this downdraft we've had in these stocks.
Okay, buying the dip. And I just want to make a quick note, Cody, before I go to you, Todd. I was talking with a gentleman yesterday, and last year he sold his house. I believe it was on Zillow. He had 54 showings in 5 days. From all over the country, and he got way over his asking price and paid a lower commission. So I'll shift this over to you, Todd. You did dabble in Open Door a little bit. You're now out of the position. Buy, sell, or hold in the real estate tech sector.
Yeah, interesting. Joel, curious, what state was that anecdote, that story you just told us? Was it Texas by chance?
I believe he moved from Texas to Washington.
Okay, interesting. Yeah, we have a few clients in Texas, and it takes kind of a whole separate set of financial planning skills. Good thing my partner's a CPA, but the dynamics of living in Texas right now are unbelievable. So yeah, I agree with Gene. I just don't think the timing is right, and that's why I think any good money manager needs to have a combination. Not saying Gene doesn't, but he knows this, fundamental as well as technicals. I had open in our growth portfolio in October. I cut it. Obviously, the shot across the bow with Zillow shutting down, that was an issue. I think there was a lot of questions with the margins in open. We'll talk about that. And just looking at housing inventory, it was declining for 10 straight years. If you look at it, then in like January, March, April, I think inventories went down to like about 1 million, and they kind of went significantly below trend and then came back up to 1.2 million. Kind of reminds me, in talking your book, guys, it kind of looked like a cleanup print to me, kind of went down quick and then started to rebound up. So I think inventories are starting to come back. Rates are, 30-year mortgage seems to be, they want to try to push above 3.2, follow the rest of the yields. They're not really doing that. So, baby rates are staying under control. I think inventories are coming back. Open Door, though, specifically, they had strong earnings. The last report, I think, was November 12th. I think they were looking for like $2.25 billion in revenue. They got $2.25 billion. I think the street was expecting about $2 billion. Their margins have been dropping quite significantly. They're around 13% down to 11%. I think in combination with Zillow and those margins dropping, I think dropped open, and also it's breaking support around 13.50. So I like the idea. I like disrupting the inefficient real estate market, but we need to wait for technicals and buyers to come together and join the thesis. Okay. All right, Todd, I'll stay with you on this one. And how much time you spending in the metaverse, Todd? Let's talk about the metaverse. I'm such a dork. What's he going to show us here?
What's that?
I mean,
what do we got?
What do you mean?
Oh, is it an Oculus? Is it an Oculus?
Please tell me everybody has tried one of these. Gene, have you been?
Wait,
have you
is it an Oculus?
I'm there.
Do you have them?
I do. I've got Quest 2.
Is that what I have? Is that the latest?
That's what you're holding right now. Yep.
Okay. Yeah. I don't know what they're called. They're awesome. I did a video for CNBC. So I record this show called Trading Nation here. It's sponsored by Schwab. And you literally have the ability with Oculus to do a virtual reality analysis session. The software is built into these right now, where I have 3 34-inch monitors. I can sit my butt on a beach, put the goggles on, and you can break out your monitors and put them anywhere you want. I logged on the platform and I did an actual options trade in virtual reality. Point being of that story is the technology is there. COVID, I think, only accelerated the technological trend we were on. We are going to be transacting business. We're going to have virtual shows. We're going to have meetings in VR. The technology is already there. I think Facebook is doing a nice job trying to rebrand themselves, move into this space. I know they just did a deal with Matador, kind of mapping out 3D technology for, I think, housing applications. Maybe Gene can clean me up there. I'm very, very bullish. And I think the way semis been trading over the last 12 to 18 months have been sort of a leading indicator to what this is going to be. I'm very, very bullish on this.
Okay, and I see you mentioned obviously Facebook. You had Nvidia on your list and Roblox. So, all right, Gene, I don't think you're gonna get any pushback from Gene Munster on this. The Gene,
Here, I would say, like the British Parliament here.
Okay, Gene, talk about a couple of metaverse plays from your playbook.
So we think about this as picks and shovels, and there are a lot of those around. We are owners of Facebook, trying to debate when I'm going to start calling it Meta, maybe when the ticker turns, maybe never. And the belief there is that they want to build a big business around it, and you got some backstop in terms of earnings. Separately is we're owners of Coinbase. We believe that is going to become the bank of the metaverse. The metaverse is not going to take USD. It will transact primarily in crypto. There's a lot of different currencies out there. Coinbase makes money on moving between different currencies and finite currencies as well. And a third of our investments around the metaverse is on the gaming side. The gaming segment has not taken off on the hope of the metaverse. It's been largely left behind, despite, with the exception of Roblox, despite being a logical starting point of monetization. And so we own Take-Two, and we get the benefit that Take-Two is currently 10 years old, the current version of Grand Theft Auto, and it will get upgraded in 2025. That's not I'm not misspoke there. It's still 5 years away, but I think there's going to be a lot of anticipation around that. And so those are the three companies that we have to invest in the metaverse.
Gene, I want to ask about the Apple car. We heard about whispers about that, what now, 5 or 6 years ago, maybe even more at this point, and we just got a headline a couple weeks or months ago about that. From your conversations that you're having, and from what you know, how far out are we from an Apple, from like actually seeing an Apple car?
I think that it's a coin toss whether they actually do a car. Of course,
Okay.
By court order, I have to disclose that I predicted a TV. Apple never actually released it. So it was a lesson learned. And I think that assuming they do want to make a car, that is clear. As far as when it would see the light of day, Mark Gurman from Bloomberg does incredible work here following his lead, is that he's saying 2025. It's probably further down the road. If they do get in, I think there's just going to be continued anticipation for them to be in the auto market in 2022. Okay. But to answer your question, later than 2025.
Wait, Todd wanted to follow up real fast about Roblox. Todd, go ahead.
Yeah, no, I agree. I hold this. We hold this in our growth portfolio. I think they're really well positioned to take advantage of the metaverse. I mean, it's a $54 billion market cap. Their market's expecting, I think, 700 million positive EBITDA this year. They're still losing 90 cents a share. They're under a lot of pressure here. There's an interesting story out I'd like to sort of address. Any of you guys have kids and they're hooked into Roblox, you see how captivating it is to young kids, which makes me a little concerned. But it's an unbelievable platform. They're going to be exchanging digital tokens. We hold it. I don't like the sell-off, and there's some concern on a report. Actually, it was out in August, and I'm curious if you guys can confirm this. I'm not seeing a lot of mainstream coverage. They're sort of engaging in like predatory practices with the developers. They give up a very significant amount of the revenue they report to the developers, but a lot of the development is done by the kids. Kids get paid in Robux. It's not real cash. Then they throw a minimum withdrawal of about 100,000 Robux. This is the digital currency. When kids try to withdraw this, it actually is equivalent to 1,000, but then Roblox keeps a vast majority of it. The kids only get $350 or so. So they're I think some of the pressure we're seeing here is these predatory practices, plus the games, I think are slightly of questionable nature. So I think they might need to do an about face similar to what Facebook's doing on a much different scale. But I think they're well positioned. I think they need to kind of straighten out their act a little bit there. And
so it sounds like what you're saying is Roblox could be in the position that Facebook is in now in terms of bipartisan agreement that we don't like you, right? And that maybe some regulatory hurdles coming down the pipe, maybe.
Yeah, I'm not seeing this story kind of get mainstream yet, and I'm saying the stock was down 12. So down 11.9% right now. So I did just buy the pullback here. I put it in the portfolio a couple of weeks ago. I don't like this action. I'm still very bullish on it. They've grown revenues. I think they're up 100% the past 3 quarters. Revenue growth is unbelievable. They just reported their stats today. I think daily active users up 30%. Revenue expected to go 30%. Some really strong numbers, and people are trying to figure out why the stock's under so much pressure. I wonder if it might be that.
And then, Todd, just to go back to the conversation about Apple we were having, I guess we can look at next year. Let's start with next year. I mean, Apple, obviously, the driver of the market, at least it was for a couple of days ago, not so much, or the couple last week, not so much this week here, but where's your head at for Apple as far as the next few months or even next 12 months?
Yeah, I mean, I like where we're headed, and I like the story around iPhone 13 and the 5G super cycle. Margins are good. I think last quarter, looking at notes here, product sales were $42 billion compared to revenues of $65 billion, so 34% on margin. They're increasing their services significantly. Their margin on services is upwards of 70%. I'd expect that to double in the next 10 years. So I like that. The Apple iPhone, I think they roughly cost $500 to make. They source products, they source materials for that all over. They're selling it for $1,000, $1,100, $1,200. I can't help but think, with what's going on in China, I think the stronger dollar is weird. We're actually starting to see some of these hardware companies with fair valuations starting to perform well, even in a stronger dollar environment. And you got to think, with stronger dollar, maybe we're keeping some of the input costs lower. We're importing less inflation, and I can't help but think, does that help? Aside from materials sourced in China, outside of the rest of the countries that produce materials that go into these products with a stronger dollar, does that help margins a little bit for products? And, I know that's against conventional thinking about multinationals in the relationship to the dollar. I know Apple gets 60% of the revenues overseas. So it seems to be the stronger dollar is helping the fairly valued tech stocks. Again, back to the opening statement, dollar being destroyed with everything that's happened, tons of liquidity going into the system. That's not what's happening. Dollar's being very strong, and it's just continuing to drive. I'm getting off topic here a little bit, but I almost wonder if this is a little bit of a 1999-98 where foreign currency transactions are being done to buy dollar to buy our stocks, and that's going to lead to a direct correlation. So just getting off topic there a little bit, but I want to throw the dollar in there. I think that's interesting.
It's like the term fairly valued, you just triggered half of FinTwit with that. A little bit of a subjective thing, but maybe not. Gene, anything that Todd just said there that you don't agree with?
General agreement. I think all of that is the framework. I think about for the stock to move higher, which I do think there is upside. We need multiple expansion. It is not of sound footing to make all of your investment decisions based on multiple expansion as a general practice. I think that there will be multiple expansion on Apple in 2022, despite that sound footing comment, and because I think it's as Barron's recently said, I think that the anticipation around metaverse products, mixed reality, augmented reality headsets, autos will be ear splitting in 2022, which is good for the multiple.
All right, Gene, we're gonna stick with you on this one, and we're gonna talk Tesla, a stock that you've been following for a long time. We're currently under a little bit of selling pressure, and I want you to know that I learned a new phrase from Gene when going over the notes here. And Spencer, I'm gonna ask you, do you know what VTOL stands for?
VTOL. Todd, do you know what VTOL stands for?
I don't. I have to plead ignorance.
VTOL. That's
Yep.
a new one. That's a new one for me. What is it? stand for?
Vertical takeoff and landing aircraft.
Okay.
That's
Am I
awesome.
am
That's
I a
awesome.
tech wizard or what? Just
Oh,
Sound
yeah.
like a
That's it.
pro.
just
That's
being
it.
on the line with these two guys, I feel like I must be in the metaverse and I must be like a genius. No, all right, let's
it.
go to Tesla here. You're talking obviously the EV, the energy with their batteries. Where are they going with autonomy? You're also talking about HVAC. You're talking about VTOL. You're talking about robots. I mean, are they going to spread themselves too thin here? Or what's going to be the driver? What's going to be the driver to get this stock, back in 4 digits?
I think the driver is going to be deliveries and continuing to show that consumers want their product. I think if you look across auto right now, there's more competition than ever, but that competition is still largely missing the mark. Rivian and Lucid, those companies, bravo for what they've accomplished so far in the public markets, but they haven't done the deliveries. They don't have a mainstream price car, and they're more 75,000 and up. And so I think deliveries, to answer your question, is the big driver here. It's all that matters over probably the next couple of years. And then energy, their business, their solar panels, and their storage, that starts to gain some momentum. And then, the HVAC, by the way, HVAC stands for just exactly the HVAC in your house. There's nothing very glamorous about that, but that's something that eventually or vertical takeoff and landing, that's decade plus out. But my point there is that they've got a roadmap, and they're going to go over it, pursue it slowly. But that's what investors love, is growing companies that have other markets to grow into. And I think stock could be down a lot in 2022. I have no idea, but I think long term it still has a lot of upside to it.
All right, Todd, going to you on this. You're bullish on Tesla because of something that Gene didn't mention. Why don't you bring that to our listeners?
Yeah, I will for sure. And I just want to echo what Gene was saying in terms of I did Lucid when we talked about this a couple of weeks ago on air, and just balancing out the reservations and deliveries of Lucid, the valuation they're getting compared to what Tesla is done. They have 13,000 reservations to date. They've, I think they might deliver 500 cars this year, 20,000 next. I think there were maybe 50,000 2 years out, and you're talking, Tesla, which has delivered 600,000 cars plus the other parts of the business. I mean, it's not even close. And this Lucid car winning, I think that the Motor Trend car of the year, it's $125,000 price point car. I thought that was such a misleading kind of statement. This is not the market that Tesla, all of the market that Tesla's going after. But what I can't help but think, and I've been searching the internet for this, I don't see how Elon is not going to tie SpaceX into the passenger vehicles, taxi service, but more the passenger vehicles, not only over-the-air update, but a good combination of camera, radar. I don't know if he goes LiDAR, but the communication between the cars, the 5G towers are not, I think, sufficient enough to get coverage. The range is actually quite short. I don't know how Elon is not playing this game, that he's going to connect satellites to the cars. I think he has about 1,500, 2,000 satellites, give or take, in the air right now. FCC has permissioned him for 40,000 lower Earth orbit satellites. He's going to blanket the globe. That's going to provide seamless internet coverage that is going to assist the autonomous driving game. And I just don't see how he doesn't destroy the competition with this. Everyone else is caught. There's one Chinese company. I was reading an article yesterday, prepping. I forgot. They are building a car with these hexagon type deals in them that are able to be smaller size receivers for the satellite, whatever. I'm a little out of my league here, but there are companies who are doing this. And I don't see, and Elon saying he's not doing it. He said they're only for RVs and trucks. Elon's probably trolling us. I'd love to know what you guys think and how, if that happens, how Tesla doesn't take everything.
Gene, you wanna comment on that?
I would love Gene's thoughts before my own, personally. Gene, I know Gene's here. I see you. Make sure you're not on mute.
Is that any better?
Yeah,
okay,
we got you.
Beautiful. I think Tesla's in the driver's seat there, and I think it's their, to answer your question, I think it's their game to win, to lose. And I didn't think of that piece as one of the reasons why I was, or kind of some of the catalyst to it, but it makes a ton of sense.
Okay. All right. Well, we're coming up on the 30-minute mark here, and I just want to get some closing thoughts from each of you. Todd, in your new role, money management, trader, technical analysis. What one clue, one not, I wouldn't say a clue, but like one valuable lesson from investing and being in the markets that, short-term traders, long-term traders, what's one tenet that you kind of like to stick to and you kind of feel that it's been a positive catalyst in your career?
Yeah, it's a great question. I really appreciate that. Starting a wealth management business, opening an RIA, and talking to the wonderful clients who are coming in and considering coming in, and I'm able to look inside of their accounts and see what they're actually doing. And these are the same people who are coming to us that listen to Benzinga and listen to all the day-to-day content. And I think the technology age we're in is a wonderful thing in terms of opportunities out there to be properly invested. But at the same time, as a function of the digital, I think the second wave of this digital revolution that we're in also creates a very quick pace of information, a lot of information, and I think it adversely affects the mindset of investors. And unfortunately, guys, I think a lot of the people who are very tuned into the day-to-day are often focused on the negative, the down headlines, the sensationalistic, scary headlines, who are by design to get their attention, because that's how you get eyes on a story, or the loudest guy on Twitter or whoever. It's leaving a lot of people underinvested. So I think it's amazing how much money has been left off from people who are very intelligent, very successful jobs in other area, who just get very sucked into the information flow, which today is so quick and so thick. So be sure to just listen, know what's being said out there, but really don't try to be in and out of the markets with that core piece of your portfolio. I just did a study, 100-year Dow. I think Dow's never been down 6 years in a row. Aside from the 1929 correction, Dow's never been down 56% in those 5 or 6 significant corrections. So, a lot of people are worried to be in the market. If you look at what history's done, the drawdowns are not that bad when you get past and you have a longer term holding time frame. So just make sure you understand the difference between investment money. Don't sit there and try to time in and out with that long-term money. If you want to trade in the short term, do it.
I agree with that. And Gene, a little bit different question for you. This is coming from our own Aaron Bree. He said, could you ask Gene when he first started following Apple and starting, following technology stocks, what was it, that made you latch on to this company? Can you remember one particular incident? And what, just something, what was the tipping point? Because you've been following that stock since like the mid 90s, correct? Can you remember going back that far, what it was? And the reason he wants the answer to that is because he wants to find the next Apple. He wants to do his own research and not have to rely on other people. Gene?
I love it. Yeah, and that's appreciate the opportunity to go down memory road here, and would just say is that we want to get this right going forward. We're happy what Apple's done over the years, but we want to get it right going forward. It was a very clear moment for me for holiday gift. Just after a few months after the iPod got out, I was lucky enough for my family to get me an iPod. I didn't have a Mac at the time, and so I'd go into the graphic artist team at Piper, let me use their Macs at night where I could rip CDs onto the iPod, and I'd go and it'd take like 30 minutes to rip a CD. I'd set my alarm, I'd sleep. This is at like 11 o'clock at night. And I did that for a few nights, loaded a few hundred songs on my iPod, and I realized this is ridiculous. I'm just going to go out and buy a Mac. And there came the theme of the Halo. And what actually happened was when you just realize like this is so good, and the world doesn't understand it. Those are the aha moments. I think I have been positive on Tesla. I don't think I think there are other people. Kathy Wood was well there before I was, but I think there's probably some similarities to people who got Tesla right at first. I remember one person, original buyer of Tesla. He bought the car and then he went out and bought a bunch of the stock. And it's there, those kind of moments happen probably once a decade, but when they happen, you know it and take action.
Awesome. Gene Munster is the one of the founding partners of Loup Ventures. Gene, we always appreciate your insight as always. And Todd Gordon, want to give Todd a plug as well, because Todd is not only a CNBC contributor, but he's the founder of Inside Edge Capital Management. Gene, Todd, thank you so much for coming on Benzinga Live today. Always a pleasure to chat with you both.
Thank you.
Thanks,
Thank
guys. Had a lot of fun. Appreciate it.
Yeah, great input. Thanks, Todd. Thanks, Gene.
See you guys.
All right. Have a good one, Todd. Have a good one, Gene. All right. Joel, that was fun.
Yeah, man. I mean, the wisdom between those two guys. I mean, I don't know. It's you can read stuff in textbooks and you can look at the charts all you want and you can anticipate earnings and you can make fun of Wall Street analysts. But when you spend time with people that are so dedicated to their profession and are just so level-headed in what they're talking about.
Wait, real fast. And hold on, Todd, before you leave, I see Todd lurking. Todd, there was a question in the chat about someone, Raz at One Oak said he's interested in becoming a financial advisor. If you could drop some insights for him in the YouTube chat right now, would appreciate that, because Todd just made the pivot himself. But Joel, thank you so much for arranging that. Gene and Todd are busy guys, obviously. So their knowledge is, they've forgotten more than I know. Right? We'll put it like that. They've both forgotten more than I know. So we always appreciate. Always great to hear from them. Joel, I'll talk to you again in a couple hours, I guess.
Okay. All right.
Dude.
All right.
Joel, reminder, 2:00. Don't forget.
Yeah. Yep. Cancel orders.
Don't leave your desk. Cancel all orders.
Come on, pump and pound, baby. Come on, just crank that thing. Don't just grease it up and just kind of let us down slowly, kind of what Gene said. But okay, back at the close with you all. Thank you very much.
All right, see you in a little bit. Our next guest is already here. We got to keep it going. Let's bring him on right now. Gareth Soloway. We're talking in the money stocks. And Gareth, I see you, I hear you. What's up, man? How we doing?
Hey, I'm doing really, really well. How are you doing?
All right, doing great. I got AB joining us as well. Gareth, don't forget, 21 minutes from now, we have a Fed meeting.
I got the alarm set, ready to go.
All right, making sure. No, if you learn nothing else today, it's set an alarm. 20 minutes from now. That's it. Gareth, curious how the last few days and weeks have been like for you. How are you approaching this meeting here? If at all?
So definitely the big thing about the meeting, and this came up after the PPI number, which I think was yesterday morning, the inflation is just so hot. The pressure is on Jerome Powell to act. I mean, I'm sure the Biden administration is pushing him to act against inflation now that it's becoming an issue for a lot of the voters for the Democratic Party, right? You have the middle income, the lower incomes that are just getting crushed under inflation. So my guess is they're going to up their taper coming up here. And the question is, do they give us guidance on when interest rates could go up? And that could be something that the market's not quite ready for.
Could not agree more. They've already said they're going to probably speed up the taper. So it's a question of And then they've also said that they're not going to raise rates until the taper is done,
Right.
i.e., until they're no longer buying any treasuries, right?
Yeah.
So, like, does that take 1 month? Does it take 5 months? Right? It's sort of the question.
My guess, if I had to just guess, I would say they'll finish the tapering by the end of March, so the end of the first quarter, and then they might indicate as soon as the beginning of the second quarter raising rates. So it's a lot faster than first anticipated. But honestly, I mean, the PPI numbers were just ridiculous. I mean, it's amazing how much inflation's out there, and it's not going away. Remember, when it's PPI, it's producer price. So that means it's the producers getting hit with it. Eventually, they pass it through to the consumer. So it's basically like a leading indicator when you have the PPI numbers so hot.
So Gareth, we've talked in the past when you've been on the show about being kind of a, I don't know, contrarian trader. Like if everyone's saying they hate this stock, then we're going to look at it and say, hey, maybe we like this, or vice versa. It seems like all week everyone's been very bearish.
Mm-hmm.
Do you see a case where maybe we have a surprise announcement and we see a rally after the meeting?
Yeah. Believe it or not, that would not shock me one bit. And what you can see here, there's a couple signals, right? Number one, as the markets are going down, they're already pricing in that more hawkish Fed. So the market, without knowledge of what's going to happen, the market is always nervous. They're thinking, all right, is it January? They're done tapering. February, March. Oh my goodness. So once we get some clarity on that, that does kind of clear up one of the fears for the markets, and the markets can say, okay, I'll digest that now. And the other thing that is kind of interesting is that yields are not going up, right? So if they're going to start raising rates sooner and inflation is hotter, you would assume that the 10-year yield would be surging higher towards 2%, and it's not. And what's scary about that for me as an economist is that you have to wonder why, and is that telling us that the bond market's anticipating economic growth to slow down? And that's really the only thing I can think of with the hot inflation numbers, why the bond market's not reacting more on interest rates.
Well, what about the argument that the high inflation numbers, the expectation for the rates to be raised, all that's already priced in?
Oh man, I mean, if it is, that would be absolutely miraculous considering where the stock market currently is. I mean, think about it, you're removing 120 billion a month, and that's $1.5 trillion a year just out of the system. Then you take out last year we had all these checks going out to Americans, massive spend because of COVID. I mean, you're removing so much that if the market downshift that we've seen here was it, I would be absolutely floored.
Well, one can hope.
Yeah.
Everything is priced in all the time. Therefore, nothing is priced in. Gareth,
Sorry, and I was just going to add one more thing. One of the things that I've been noticing more and more is that, have you guys noticed how the leading stocks, there's less and less of them? It used to be like, Tesla was a leader. It used to be, even Rivian was a leader. Then you had Apple and Microsoft and all these others. And the Teslas have kind of passed on now. So as Rivian, it's just like a few stocks. And if you bring up, let's say, a basket of 100 stocks, I would say 90 of them are in bear market territory already. Mm-hmm. So the breadth of the market has gotten very, very weak. And if these like Apple and stuff start to decrease, if they go down, the market definitely could see some downside.
Or on the other side of that argument, because like you said, the breadth of the market sucks, right, and yet the SPY and the Qs are near all-time highs. If that breadth recovers, right, that's not necessarily to say, like, if breadth recovers on the one hand, and on the other hand, the leaders, the FANGs, stop going up, maybe the how do I put this? Maybe the concentration that the FANGs have in the major indexes, maybe that gets smaller, and maybe we still keep going higher. I don't know, just a hypothesis.
Like you're saying, and maybe at least it kind of stops the market from really selling off. Like maybe it's kind of a neutralizer, right, where you have those stocks, and it's possible for sure. So I mean, that would be nice. I mean, I'm invested in a bunch of these, like Viacom, and I'm like, all right, this thing's trading at a 7 PE. Why the heck is it still sticking here? And it just doesn't go up. So I mean, I've definitely been affected by some of these that don't make a lot of sense in this environment, but it is what it is. But you're right. I mean, there's always a chance of that. If I can show my charts here, what you guys can see is we're basically stuck in this channel, right? So that's, I think, the best indicator for us as technical, traders, is that as long as you stay within this channel that's been going on since basically the March 2020 lows, then the market, you could kind of give it the benefit of the doubt, right? I mean, as long as it's staying, this is an upward trend, very obvious to see. But I would be very cautious if you break this lower trend line here. Again, notice how it really hasn't broke for a long time. That's where I would get scared of the market downshift. So as long as it stays in there, you're right. I mean, you give the market the benefit of the doubt right now, give the Fed the benefit of the doubt. Maybe they know the secret sauce to keep us going higher.
Benefit of the doubt. That's a contrarian take. Okay, so Gareth, what stocks are on your radar? Obviously, with the caveat that everything that we say now could go out the window in 15 minutes. But what's on your radar right now?
Yeah, so I've been kind of slowly accumulating some of the plays that I think are going to do well in 2022. There's something called the January effect. So usually what you see in December is any stock that's gotten hammered for the whole year, the tax loss selling to offset gains is really concentrated in those names. So for instance, like a CGC here, Canopy Growth, the marijuana stocks. I mean, you can see this chart has just been absolutely atrocious the entire year. So there's going to be additional selling into the end of December. But once you get into January, all that selling, if anyone was going to sell this stock, they're going to do it in December for the tax loss purposes, which removes a lot of sellers in January. And you usually see what's called the January effect, and it usually sees a pop to these stocks. So something like this, Viacom, Discovery, AT&T, I'm kind of focusing on better quality in many cases. Not that CGC is the greatest of quality, but an AT&T that pays a good dividend. This stock, again, has just been pounded and probably seeing some tax loss selling over here. So these are the ones where I'm saying, okay, it's a good quality stock, pays a great dividend, profitable, and it's been beaten down. I feel safer in these names versus a Tesla or something else that is basically shot to the moon over the last 12 months or so.
Okay. Yeah, I'm down with that. It's so funny because there have been periods, very brief periods over the last couple of years, maybe a couple of days or even a couple of weeks or even a month is where value outperforms. And for those brief windows of time, all the value nerds are like, see, I told you, but it never lasts.
I know.
Never lasts.
It like keeps teasing us, who are investing in these stocks. You get these little blips up, and then it just kind of reverses and takes it all away.
Yeah. That Discovery chart, Viacom looks identical. They're disgusting. Gosh.
Yeah, there was an interesting note by an analyst yesterday that said Discovery, once the merger gets closer with HBO Max, could double in value based on the valuation that HBO Max is going to bring to the table. So again, doesn't mean a hill of beans, frankly, but just worth kind of keeping an eye on that these things have gotten so cheap that there is some sort of value. And again, if you're someone like me that's concerned about the Fed withdrawing a lot of their liquidity, you want to kind of go, if you still want to be long the market, you want to be carefully long. And stocks that have been beaten down that are good quality names are a little bit, not to say safe, but safer than other names, I would say.
Yeah, I forgot all about that. That was they announced that like 6 months ago. So Discovery. So what's the merger again? AT&T is spinning off like Warner Media, right?
Yeah.
And they're merging that spin-off with Discovery. Is that correct? I think that's correct.
That's what I've heard, right? So yeah, you have so what I do is I'm looking at like a Netflix valuation or something else, and not that HBO Max is quite as big as Netflix, but I'm saying to myself, they spin this thing off, they combine these companies, it's got to be a close to $100 billion company right there. Is that good for AT&T? I assume AT&T will still own some of that new company. So that could be a value play. And then also I got to look closely at the deal, like what share size, how many shares of HBO Max and so forth, or Time Warner Media goes to Discovery. But, to me, it's one of those things where when it's beaten down this much, tucking a little bit away into next year when the merger happens could be a good play.
Yeah, and someone in the chat earlier was asking about AT&T. I don't know what's going on with AT&T. It's just been on a historically the bad run. It does not look pretty right now. Shout out Nomadic Trades in the chat as well. We miss you, Jameson. We got to get you on the stream sometime.
Yes, JMO, where you been, man?
JMO, we'll just get you on this stream sometime soon for 15, 20 minutes. All right, Gareth, anything else in particular? I know we've been watching the financials into the meeting. Anything else?
Yeah, I mean, you and I have talked about Alibaba before. Alibaba
a number of times.
Hit today. We keep on getting these big bounces, and then it continues to break our heart. It does have a short-term bull flag here, but again, you just don't know where the Chinese regulation is going to end with the Didi delisting. Where is Didi going to be? That's, by the way, when we hear from Didi. And by the way, they hired Goldman Sachs, I believe, to do the delisting. That's actually a good sign in my book because Goldman Sachs was part of the company that brought them public. And my guess is Goldman doesn't want to burn a lot of the investors that bought from Goldman at $14 a share at, if it goes private or flips over at a certain dollar per share value. So I'm hopeful that Diddy will be a positive for the Chinese market, maybe some clarity on delistings in the future. And yeah, we'll see from there. But, definitely still eyeing these at the current valuations. I saw some note yesterday that said the Hang Seng market, the Hong Kong market, is trading below book value. The whole entire market is now trading below book value, which is just absolutely insane.
Well, that's what happens when growth is out of favor. You throw the baby out with the bathwater with
That's
the
right.
Alibaba. I mean, so as I've been saying this repeatedly. I think I broke a record, but next year it may take a few months or a few years, but we're gonna look back and say, wow. Remember when Alibaba was at like 150 or whatever it's at right now? I don't even know.
120.
120? Okay, sorry, 120.
I don't know what it's at right now.
I don't know where it's at right now.
Can't see that far.
Remember when DraftKings was in the double digits? I mean, that was hilarious, right? I mean,
yeah.
But,
Yeah, is it going to be the one where it's like, oh, I wish I bought Bitcoin at like $1,000, and
Right.
that's what you're going to say about Alibaba?
Right.
Yeah. So just for some clarity in the chat, 2 p.m. they'll be making the announcement, and then after that 2:30 they'll have the press conference. Someone in the chat saying bring Symbol, and we'll get Brett back on soon. Don't worry.
Yeah. All right. I'm almost getting nervous here. We're 9 minutes out from the announcement. And then, so here's what's going to happen at 2 o'clock, right? 2 o'clock's going to happen. Aaron and I will probably stay on for a couple of minutes, but we're going to end the show then, and we're going to redirect to the roadmap, which is our NFT show. And then at 2:30, well, actually a few minutes before that, at 2:25, when they're getting the stream ready for the actual press conference, we will have a separate stream for the press conference. That'll be again, that'll be in a half hour from now. I'll put the link to that in the chat, but it'll be on youtube.com/Benzinga. And that's where you'll be able to watch his statement, and we can all watch either the world goes up in flames or we're all just being way over dramatic.
Can we
here.
get a chart back up real quick? I want
Yeah.
to look at a couple things real quick that have been moving intraday the past hour or so. Gareth, let's pull up SoFi. We were talking about SoFi earlier. And I saw on let's go like 15 minutes or something.
Yeah, there you go.
So I don't know if this is why SoFi is moving up this much, but Bitcoin is too. So maybe it's let me see.
So that's your intraday short-term resistance coming up. Looks like around 1450. If it can break through 1450, might get some legs, an additional squeeze. Yeah.
Well, we're gonna have to wait and see what happens to see if whatever the Fed announces will have an impact on SoFi. But I found that interesting. SoFi up about 2.5% over the last hour. So Bitcoin moving nicely too.
Yep. Yeah. Let me bring up the Bitcoin chart here. Yeah, Bitcoin's been kind of stuck in this range recently where it's actually that's a great move. And this is all, by the way, jockeying going into the Federal Reserve announcement. I mean, this is what it is.
You know what? I love that. Let's keep that up. And I'm also looking at the Qs. Let's see if we can get the Qs, Bitcoin, and like the TLT up. Aaron, can you get the TLT up on yours? And we could just go back and forth.
I don't care about bond yields.
No, but I want to see movement. I want to see volatility. I want to see some action.
Well, then let's look at VXX.
Oh my gosh! Fine, VXX. You want to look at some VIX thing that
I don't know. Fine, TLT. I'll do
fine.
TLT.
No, let's do VX.
Oh, there's TLT.
I don't even know what the VXX is. How does it even work? It
just tracks VIX.
It just tracks. Is it an ETN?
It's an ETN. Yep.
Okay.
Which Spencer, if you're curious about what an ETN is, Spencer can describe it to you.
I'm not going to right now.
Okay.
I don't feel like it right now. All right. Bitcoin. Wow. Can we zoom in? What is this? A 15-minute chart? Can we zoom in on that chart, Garrett? I want to look at those last few candles. Yeah. I'm gonna really want to be looking at as many charts as I can in the next 10 minutes or so. But that Bitcoin move, okay, this is gonna be worth watching in the next few minutes for sure. How does Bitcoin react to a Fed announcement?
This will be hilarious if we see just the markets absolutely ripping after the Fed announcement, because everyone has been so bearish, and it's like, look. What does it say? History doesn't repeat itself, but it often rhymes. We've had Jerome. How many times have we seen the market?
Mark Twain said that.
How many times have we seen the? Mark Twain's from Missouri.
I was joking.
Okay. But Jerome Powell, like every time he's spoken in the past, 2 years, year and a half since COVID, really, the markets just go insane. So to bet against Jerome Powell right here,
Yeah.
I'm not doing it. I'm not going out buying puts. But let us know in the chat how you're playing this.
Yeah, and I agree with you. I mean, in general, he doesn't want to ruffle the market's feathers, right? I mean, he doesn't want to cause a crash. He doesn't want people to remember him as the guy that caused a crash. So he's going to say what he needs to say, but he's going to also, I think, say the Fed will always, just like he always says, the Fed will be there. If anything happens, we'll be there. We'll start, things are subject to change. And he's going to try to kind of cushion whatever he says if he has to be more hawkish. There's no doubt. So I wouldn't be surprised if the markets bounce.
Wow, Gareth, if we pull the SoFi chart back up and go down to maybe like a 5-minute, looks like we got to that level that you pointed out and kind of came down from there a little bit. So like you said, we need to break through. What was the level you said, 1450?
Yeah, it seems like 1450 is the spot there. Now, let me get that right trend line. That's not the right one.
Again, it's kind of, to me, it might not be worthwhile like doing the charting on this stuff because anything could happen in 4 minutes once this announcement is made. But SoFi definitely making a good move over the past hour or so. Let's see. Anyone in the chat got anything they're playing into the meeting? Quantum saying he's eyeing QQQ at 380.
Let's take a look here.
Jesus Reyes is saying he's absolutely bullish. Hodl and to the moon. No fear. Love it, Jesus.
Just looking at the intraday cues, this is the level it's got to hold down here, 384. If this gets broken on the Fed, then that could be trouble. You could see a big down day. So, it's got a little downside. It could go without breaking that level, but that's your technical level right there. No doubt about it.
Someone, Chintan, is saying they're playing ARK puts. So they're hoping for, if you're buying ARK puts, you're hoping that they raise rates and growth just gets hit. Those ARK puts.
If you're buying ARK puts now, you're hoping that they raise your rates in 2 minutes. That's what you're hoping
exactly.
for. Which is not going to happen. Just so we're clear. That's really
we don't know what's going to happen. Roblox. So Kindred Duke said, Kendrick, how you playing Roblox? Roblox might be like the epitome of growth tech name.
Yeah.
Yep. There's your ARK trend line. That's what it's been hammering on. So it's amazing because as we go into this Fed decision, there are so many charts that are on key pivotal levels. So it's like you're either going to get a monster bounce or probably a big flush over the next few days.
The chat's flying now, so I can't see it, but someone said Tesla calls. I love that. That's what I like to hear. Some YOLO calls into the meeting.
Tech is moving. If you look at the ARKK, it's moving. We're above 91, almost at $92 now in ARKK. So we are
probably
inching up
covering
into could be hedging. We don't know. We are going to stay on for a couple of minutes past the hour. Aaron, can you share your charts so we can just get a variety of charts going here? Because I want to go back and forth real quick. I'm going to try to get the statement.
You wanted me to have TLT up, right?
Whatever you want. I don't actually care. We're just something. I've got ARKK on my screen.
GameStop.
Gareth's got Tesla. You want GameStop?
I was kidding.
No,
I'll do
I
TLT.
feel like, can you do Bitcoin or something?
I'll do Bitcoin.
Okay, cool.
It's a good.
It could be a short covering, but we are rallying. Rally is a strong word, but we are going up into this meeting here.
Oh, there's definitely like positive momentum going into the meeting. I don't know if that's a good thing necessarily. We'll see.
Hopium.
Yeah.
Yeah, it's Tesla starting to inch up a little too. All of these things are inching up.
I asked this earlier, Gareth. I like to think that Powell is like driving to the meeting, or he just got there and he's still about to decide what he's going to announce. Like he's going to flip a coin. He's like, I don't know. I'm feeling no rates today.
Yeah.
A no rates day.
Well, and I think it's also important to remember that sometimes the first move is the wrong move, meaning that I've seen the market flush initially, then reverse and rip, and then vice versa.
Absolutely.
So
Gareth, real fast.
That.
Gareth, can you pull up SPY or Qs or something on your end, just and we'll keep that open
we'll do
here.
The SPYs. This is the SPYs 15-minute.
There we go. Can I ask you to go to a 1 minute chart?
Sure. It's going to look crazy.
Joel would not like that, Spencer.
Dude, chill with it's 1 minute. It's all right.
I'm just saying Joel is not happy that I used the one.
All right.
Starting to uptick a little bit more.
Uh-oh. Here we go. To the moon? No, to the floor?
All right.
To the window, to the wall.
Everyone refresh. I'm refreshing my... oh, no, we're not.
Oh, here we go. A little bit of a sell.
I'm
Looks
going to
really
Twitter.
nasty on the 1
I'm
minute, but
I'm on the Federal Reserve website, and the statement's not up.
it's because the institutions get it first, guys. Come on, no, I'm just kidding.
Right. It's up. Okay, here we go. All right. See, quick reversal. So blah blah blah. I'm going to skim this and read out loud for you. Committed to a full range of tools. Yeah, we know that. This is all generic. Okay, maximum employment over 2%, or inflation rate of 2% in the long run. So keeping rates the same right now, that's not a surprise. We knew that. The committee expects it'll be appropriate to maintain this target range until labor market conditions have reached levels consistent with the committee's assessment of maximum employment. The committee decided to reduce, yes, we know tapering, so they're reducing the pace of their bond buying. Beginning in January, the committee will increase its holdings in Treasury securities by at least $40 billion per month, which looks like that's in line with, is that in line? No, it's lower. So they're increasing the rate of their tapering there. Okay, so the statement by itself doesn't really say, it kind of says, increased tapering. There's nothing really surprising out of the statement here. What chart is that? Is that the SPY?
This is the spider 1 minute. You got a head and shoulders, but it hasn't broken yet. It's getting saved right at the neckline right here. Now they're starting to push it back up. They're trying to reverse this thing.
Okay, the committee would be prepared to adjust the stance of monetary policy as appropriate if risk emerged. Yes, we know. Okay, it's all very boilerplate. That's how these things always are. Okay, so it's kind of what we knew, right? Obviously, no rate hike now, and more deceleration, more tapering of their bond buying. Can we pull up a chart here? I see we got the SPY up. Do we have? Let's pull up some tech. I've got tech up on my screen. I've got ARKK. ARKK popped and is now reversing. AB, you have Bitcoin. What's Bitcoin doing? Bitcoin's ahead, supposedly. It's what they tell me. Bitcoin not really moving. What's going on with Bitcoin? Is your chart?
I don't know. Let me refresh it real quick.
Let me refresh your chart, please. Let's go back to Gareth. We got the SPY. Okay, we dipped and we bounced.
Still wavering, though.
Big drop.
They might be waiting for the statement. You know, you got Jerome Powell coming out to answer questions. That could be.
Yeah, you get the earnings, but it's more about the guidance.
Right, yeah. Exactly. So the statement that we just got was that no rate hike now, which we knew, and they're going to keep on the tapering. They're going to keep on buying less bonds than they have been, and less treasuries than they have been, till eventually they get to a point where they're not buying at all. And at that point, they're going to start cutting rates. That's what this decision just said. We don't know more. We'll know more until we'll know more at the press conference. But BT. See, this is why I love the chat, because I only got so many screens in front of me right now. I'm trying to watch 10,000 things at once. So we are guiding some 2 to 3 rate hikes next year.
So
okay.
So Fed doubling taper to $30 billion. That basically puts it in line with that March ending in March, with potential rate hikes after March. So end of first quarter.
And then from there, we probably get a rate hike there, a rate hike into the summer or the fall.
So it seems like the market right now is telling us it basically expected that, or maybe it's not as scary as people thought.
This is not a surprise. This is what we said. This is not a surprise. Yeah. The real fireworks will come if they say anything crazy at the conference in a few minutes. But okay, so now we're rallying here.
You just hit a little resistance. You're pushing through it, though. Next spot is going to be the top of the head right here. And if you can negate a head and shoulders pattern by taking out the high, that's very bullish.
Okay. All right, we do have to hop because I know the roadmap is going live, and we have to redirect to those guys and send them your way. But this has been fun. Bitcoin, come on, where's my Bitcoin chart? There's my Bitcoin chart. Come on, Bitcoin. Bitcoin ripping.
There you go.
Bitcoin 48. Do I hear 49? All right, bullish for growth, I suppose.
Look at Tesla, too. Tesla turned on the day, was down 2.5%. Now it's green.
Nice.
Okay. The interpretation here is that this is good news because
they're not raising rates.
No, they are raising rates, just
Well,
not
they're
right now.
They're tapering faster, right?
Yeah.
Apple rip it. Oh
But
my.
that should be. I am confused, guys.
I'm
so
confused.
I'm so confused because this is the kind of thing that on paper you don't want for a growth asset, but here we are. Bitcoin is popping. AB just said Tesla's popping. Is that true?
Well, it reversed. It was down 2.5%, and then it's now in the green.
Yeah.
Oh, yeah,
all
that's a nice
right.
pop.
Growth popped. Sell value, buy growth is what just happened there.
I bought some YOLO SoFi calls earlier today.
Great.
They're doing pretty well.
All right, we got to wrap. Gareth, always a pleasure, man. Thanks for coming on Benzinga Live today.
Thank you guys for having me. Take care.
Gareth, I hope you've got some fun plans for the holidays. We'll get you back on in the new year.
Thank you. Happy holidays, guys.
All right.
All right, we got to hop. The roadmap is going live right now. If you want to tune into the press conference, go to youtube.com/Benzinga. I will put the link in the chat one more time. It's not going to start. The press conference, that is, won't start for 25 minutes or so. But I'll put the link to watch our stream right now, and you'll be able to watch Jerome Powell there. But we got to go. The roadmap is going live. If you have any questions at all about NFTs, today is your day. They're doing basically a full show of Q&A and news. So send them your questions. This will redirect to that stream. For Aaron Bree, I'm Spencer. We'll catch you guys later, and stay green out there. And
Peace and love, y'all. We'll be back tomorrow, right?
yeah, that's the plan.
Tomorrow.
We'll be back tomorrow.
All right.
All right.